markets, but the VIX is also pretty interesting. It's flat, but levels of 12 is what we have to note over here. And from there, it's actually come up quite a lot versus that 10 level. With this, let's just look at the advanced decline ratio, and then I'll toss over to Puneet and Sharad for the broader markets. See, I mean, the crocodile's mouth is actually kind of widening. If you see the advances, almost 1600 advances versus 800 declines. So the breadth is kind of in favor of the bulls right now. Where it goes from here is anyone's guess. But in terms of sector, Sharad and Puneet, what are the trends we're picking up? Because we've been highlighting metals, we've been highlighting the capital market space, auto as a sector is in focus. Adani Group companies are in focus. Your shrimp exporters, textile companies on the commentary of Trump are in focus. What are you picking up so far?
Well, sector-specific moves are happening, Hiral. Let's just give the overall technical setup for the markets. November series has started with a good strength, and benchmark indices are actually outperforming the broader indices as well. Hiral had pointed out the Nifty small cap and the Nifty mid cap 100 index as well. But they also did touch the 52-week high levels. Largely people don't talk about these indices, but this mid cap 100 index also touched its 52-week high levels. Currently trading above 26,000 levels, Nifty is trading. The chart support levels are important. 25,900, not much here, but the resistance level that is coming at 26,150. Nifty Bank, that's trading above the 58,400 levels, and significant contribution coming from both ICICI and HDFC Bank. Roughly 60% of constituents comes from that Nifty banking space. Resistance levels on your screen 58,600 and support at 58,100. But interestingly, European markets, they have opened in red, and slight exchanges are in green, but very flattish move buying seen in metal, energy and Adani pack. And global sentiment still is upbeat on the expected Fed rate cut. And Puneet, US-China trade meet also coming this Thursday. A lot of global macro events.
Definitely, and I think a lot of perspective has been given on the Nifty banking, something we were discussing at 12:30 as well. So investors will continue to look at PSU banks, private banks, and with Fed meet today, you have ECB as well as the Japanese meet tomorrow for rate cuts. Those will be some of the other ones to watch out for. But largely, because of what we saw on the Nifty bank, it's making higher highs as well as higher lows as well. It's a trend that we're not seeing yet in the Nifty, because Nifty continues to make lower lows. So there is a lot of volatility there on the Nifty 50. But largely, the confidence of investors on the banking pack is something that we're watching out for.
It's absolutely strong, because last two trading sessions, I think majority of the analysts who've come on our channel from a technical side have given their top picks from the banking space, number one. And secondly, when you're talking about the US Fed as well, now a 25 basis point rate cut is already something which the markets are kind of pricing in, correct? The only thing that everyone now is watching out for is the tonality. If the tonality is going to be more dovish, then you know there is going to be some bit of a positive impact that will trickle into Indian markets as well. And I think that is what we need to watch out for in terms of tonight's commentary. But a lot of individual names from the broader markets also, which are making news. And we will go across to all of them, with first heading across to Kush Bora, founder at kushbora.com, to understand what his rationale is from here on. Kush, afternoon and welcome to the show. Always a pleasure to speak to you at NDTV Profit. I mean, 26,000 is what Nifty 50 is holding on sustainably. 26,056, I think, is what we're tracking right now. A close about 26,000. Does that actually give you something different in terms of what one should be expecting, number one? And two, you're talking about a start of a November series, which has been on a pretty strong footing, is what I would put it, taking the other series into consideration. What should one watch out for?
Sure. Hi, Hiral. First of all, very good afternoon. I think, one reference to a conversation that Sharad and I had, buy the dip seems to be working right now. So if you did buy the dip yesterday around the 25,850 mark, you're making a sweet 200 points on the Nifty. Not a bad move for, an overnight play. What I would still suggest is, while the near-term trajectory looks bullish, we are within touching distance of all-time high levels, and, we could well get there. My suggestion is to be a little nimble on the Nifty, because we've seen a fair degree of volatility. A couple of points to add to that. The RSI is again back above 72. Even the last week profit booking that we saw was when the RSI hit this mark. ECR also at 1.22, close to that 1.3 zone. So some overheating, not there yet, but getting there. So my suggestion would be a partial profit book on the Nifty and then hold the rest with a stop loss just below 26,000. So that could be around 25,900, 950, that zone. As you guys were just discussing, Bank Nifty, that's the outlier, that's the star of the show, has been for some time, continues to remain. This is fairly overheated compared to the Nifty, but with the kind of technical setup, the higher high, higher low formation that I mentioned yesterday, Puneet also alluded to that just a while ago. That plus with the kind of news flow that is coming in, I think Bank Nifty still has room for 58,800 or 59,000 levels on the upside. So I remain constructive on Nifty, Bank Nifty both, Bank Nifty a little more. And I would suggest a partial profit book and then holding the rest of the quantity with the TSL on the Nifty.
Okay. So that's with regards to where the setup for Nifty and Bank Nifty goes. Kush, so in this kind of a trade setup right now, which would your top picks be?
So just before we get to those topics, just a quick update on the stocks that we discussed yesterday. Apar Industries for a target of 9,400 and APL Apollo for a target of 1,800. Both of them have done rather well. The volumes today on both of these have perked up quite a bit. So my suggestion would be, if anyone is holding these stocks basis the discussion that we had yesterday, it's not a bad idea to continue holding on to these with a trailing stop loss. So that's a quick update on the stocks that we discussed yesterday, Apar Industries and APL Apollo. Now for the day, two stocks, both of them again on the buy side. Grasim has been doing well. It's had its fair share of volatility, but it's seen time and again a rebound from the 20 and the 50-day moving average. That's happened, last week as well. Right now, you have the golden crossover of the 20 and the 50-day moving average. I think this momentum could well continue for levels of 3,000 and 3,065. Stop loss around the 2880, 2900 mark. The second stock for today is Brigade Enterprises. Again, this week a couple of times I've already mentioned that the realty and the capital goods space seems to be turning a corner, and Brigade in that space, has seen a fair bit of recovery. It's testing the 200-day moving average, but it's crossing that, at least on an intraday basis. A close above that mark, which is close to the 1,030 mark, will actually push it much higher. So for Brigade Enterprises, targets 1050, 1075, and the stop loss can be placed at 1010.
Two picks coming from Kush. Thank you very much. Brigade Enterprise and Grasim Inter. Now, the stock of the day. The stock which we are actually wanting to hear about, that is Varun Beverages. Of course, their numbers have come, but the story is not the numbers. The story is very different. There's a new product and there's a new geography in town. Now, they are adding their alcohol business in their memorandum of association, and it's coming in the main clause. So that's why the street is cheering, because they are now diversifying, and the stock is up almost 9% in the day's trade. Interesting announcement. Carlsberg tie-up they are having for certain markets in Africa, and they'll be trying first in the beer segment. Also, the Q2 earnings, they were largely in line with street estimates. We'll get some more details from the brokerages as well. And they have also formed a wholly owned arm in Kenya as well. Interestingly, JVs are also being announced in the refrigeration business. But the question remains is, why is the diversification happening? Why is the company changing the entire strategy? Of course, the first and foremost reason is competition coming from Campa Cola, from the House of Reliance. Pricing war was seen in these key products, and the domestic demand also we have seen because of unseasonal rainfall. We saw the impact actually falling as well. Now let's look at what happened to the stock earlier. The stock has cracked almost more than, you could say, 25% from 2025 high levels. Valuations as compared to its historic numbers, that itself is reasonable, but still on the higher side if you look optically. What's the update for Africa? That's very important. And we could say more SOTP analysis coming here. Morocco has ramped up their full-scale operations, while the upcoming Zimbabwe plant, if you look at it, they also have started their commissioning as well. The strong update coming in for the African markets as well. But for those who are tracking the stock, how the earnings have panned out, largely in line, nothing much to actually look over here. But if you look at the consolidated sales number, the volumes number, that has come in 2.4%. International operations also a single digit on a higher side, 9% growth coming in. But brokerages, they have some different opinions as well, especially on the new announcements. Let's pick up Novama's. Largely, they have stated that the revenue is in line and there's a miss on EBITDA coming in. While the GST cut pricing, which is already announced, that's been around 5 to 10% on milkshake and water. And also, interestingly, this is therefore almost 30% of the India business volume as well. Overall, it's a positive impact coming in this Alcobev space. And Hiral also had mentioned the ready to drink business also this segment will be catering to. That was earlier done by Coca-Cola as well. Morgan Stanley core earnings miss, and both India business and international business we saw missing the street estimates as well. But there's an opportunity in expansion, new product line comes in and new geography also comes in. So Varun Beverages, Hiral, we are looking at a change in overall strategy, but we all know the impact is coming from the competition from Reliance.
Absolutely. And I think, one point I want to add over here, Sharad, is it's not only Reliance. They are garnering some bit of their, market share. But what's happening is a lot of regional players also that have started to come in. And these regional players are actually like ants in the pants, for Varun Beverages. And that's what is happening. They're trying to take away a lot of market share in totality with Campa Cola. In fact, Kush, let me ask you, what would you do with the Varun Beverages? Underperformed 23-24% this year, and today a 9% up move. Would you play the momentum?
Hiral, what was that saying? I chuckled when I when I heard that. Ants in the pants, is it?
Yeah, the regional players are actually ants in the pants of Varun Beverages, right?
Brought a smile to my face. No, but I think this is something that Sharad would have heard before. A stock usually turns around when either the story changes or the storyteller changes, right? It seems like the story is changing in Varun Beverages. It's been in that bear clutch for a very long time now. Mid-July 2024 is when the stock actually started seeing some profit booking and has been in that bear clutch for some time. In fact, it's been a short candidate on my list as well for some time now. It started to see a rebound trade, and today's move definitely puts it in a different light. Mild resistance, I would say, around the 500 mark, which is a technically and a psychologically important mark, but also has the relevance because this is a 200-day moving average. So this is a big move. A close above the 500, 510 zone will definitely put it in a different light. Otherwise, what could happen is after this massive underperformance, the stock could perhaps consolidate in this 495 to 510 zone, because a lot of hands who've been holding on to this for some time might just go out and exit. So I think a fresh trend, a fresh rally would emerge above this 510 zone, but definitely a stock to keep on the radar.
Got the view, Coach. So definitely one, the stock's not cheap by any means in terms of valuations as well, but largely earnings growth has been absent. So it has just had a sideways momentum, and as Hiral highlighted, down almost 15 to 20% in the last 1 year as well. But let's quickly pull up something like an Olectra Green Tech as well. The stock is in focus, and so is the other EV bus makers over the last couple of weeks. And that's largely basis of a news flow coming in from state-owned CESL, that they could actually have a new tender of 10,900 buses. To talk more about this and what could be that mean essentially for Electra Green Tech, I'm now being joined by Mr. Mahesh Babu Subramaniam. He's the Managing Director at Olectra Green Tech. Mr. Subramaniam, very good afternoon to you. Thanks so much for joining in, sir. It's Puneet this side. Firstly, many congratulations on your new role. You've been in the industry for quite a while. So the new CESL tender, what does that mean for you? And also give us some perspective in terms of for Olectra as well. While I know it's not been that long, in terms of participation in this particular tender, would you be open to having maintenance of 12 years or more in terms of the buses in this particular order? Because that seems to be what CESL wants from participation in this tender. So give us some perspective on both these aspects.
Thank you for having me on the show. As Olectra, we have a very healthy order pipeline already. We have been running this 12 years contract through our associate company called EV Trans, which runs the Olectra buses already. We have about 3,000 plus electric buses on road. And we are number one last year in terms of bus registration. And so far, including Vahan and Telangana, we are number one in H1. So it's a very good opportunity that CESL has come back, and then through PME drive, the tender is under floating. We are very happy to evaluate that. Right now, we have a healthy order book between Maharashtra, BST, and other Himachal. We have about 10,000 order already in the pipeline. The new 11,000 tenders, which is between Delhi, Bangalore, Hyderabad, and Ahmedabad and Surat and other cities, have really opened up a new opportunity for bus industry. I think EV bus industry. I think it's a good opportunity for Olectra. We are evaluating the tender. The due date is on 6th. of November. Our team is working very closely to see what are all the implications, and we will decide in the coming week whether we will participate. Being a market leader, you can expect we actively participating in it.
Mr. Subramaniam, you mentioned about your strong order book of over 10,000 buses. What is the current capacity that you have right now for which is operational as we speak?
So we have operationalized about 2,500 per annum capacity on a single shift. We can actually double it in by 2 shifts. So we will be able to serve the order for next couple of years. That's the plan. The issue is not about more manufacturing. I think when we talk about electric buses, the ecosystem development, power supply to the depot, readiness of the infrastructure in the depot and the routes are more important. Where the tender, even in CSL tender says that the deployment will happen over the next 2 years. So we are producing in line with the market requirements. That's why we are number 1 in bus registration last year and even number 1 in H1 of this financial year.
So, Mr. Subramanian, you highlighted 2,500 per annum. That will be including both the shifts, right?
1 shift. So we can do 5,000 in 2 shifts.
2,500 in 2 shifts, and you're going to that progress as we speak.
We have already achieved that capacity of 2,500 per shift. If needed, we are ready to add 1 more shift to make it to 5,000.
Okay, and just one follow-up on the Maharashtra bus order, because before you came in there was a delay in execution of this 5,150 buses. Currently, as we know that there is a new timeline for execution of these 5,000 buses, could you give us some perspective of the execution of this over the next couple of years?
I think when the first tender came, it was a very ambitious timeline. Both state government as well as Olectra realized that the ecosystem cannot be developed so fast. So we engaged with government of Maharashtra, and they have also agreed that the timeline was very aggressive, and they have given us till FY 27. We have already supplied close to 600 plus buses there, and we are every month adding more numbers. As soon as the depot is ready, we will do the flag off. Even every week, we are doing almost 1 depot flag off there. So as soon as the depots and power supply and infrastructure is there, we are ready to supply the buses.
So, Mr. Subramaniam, you highlighted that 600 out of the 5,150 have already been deployed to the Maharashtrian government. The only challenge that the street seems to be having right now is execution even till FY 27, because even if you have all of your capacity being used over the next 2 years, that will be looking at the bus orders might be a little difficult to execute. Could you give us some clarity on some timelines, either by April of 2026 is what we anticipate you have to give a certain number of buses. How much would that be, and in terms of execution over the next 18 months, where do you see that execution happening as well?
We have agreed with Maharashtra government, depending upon the depot availability, that we will deploy it in the next 12 to 18 months. That plan is in place, and ramping up production of buses is not an issue at all. As I said, from 1 shift, we can quickly go to 2 shifts, and that can increase the capacity to 5,000. So in 12 months, I can finish all Maharashtra order and so on. But the reality is the depots needs to be ready, because each of these buses is close to 1 crore plus. So if 500 buses are kept waiting for the deployment in the depots, then we will lose about 500 crore. So that's the challenge. So that's what we will have to do in deploying these buses. So production is not a constraint. Readiness of depot is the most important thing which you need to close.
And Mr. Subramanian, in terms of sourcing your batteries also for the buses, currently, in the past, the managements have highlighted your partnership with BYD. If you can give us some update as to where are you currently sourcing your batteries for the buses now, as well as what's the progress in conversation with BYD as well.
So we have a tie-up with BYD, and BYD is the world's largest bus manufacturer, one of the world's largest bus manufacturers. We have been talking to them. In fact, if you look at previously, we said that we will set up a battery assembly line with the new blade battery technology, which BYD is supplying not only to us, but also even car OEMs in India. So we are working towards productionizing the battery manufacturing line in our facility with blade batteries. I think that will be a technological leapfrog jump in terms of technology, in terms of battery in bus segment is concerned. As you know that everybody, including others, import the cells as of now. Battery pack will be manufactured in India, and that's what we are also trying to get in the coming year.
That's going to be interesting, when it comes to batteries. Mahesh, good afternoon. This is Hiral on this side. It's great to speak to you now at Olectra after speaking to you at Switch Mobility. My question to you is the extensive experience that you've had with Mahindra Electric, with Switch Mobility. What is your long-term vision going to be for Electra Green? Because the trajectory of the company, I'm sure, would have been different. After your appointment, I'm sure you would have something in mind as well. So how is that shift going to look like, number one? And what are you envisioning for Electra Green from a longer-term perspective?
I think there are three parameters which are very critical I'm focusing on along with the team in Olectra. One is delivery in terms of commitment, realistic commitment and delivery as per commitment. So we have ramped up the capacity in last 1 month. We have been consistently delivering day on day, week on week, month on month, which is very important in the auto industry. And then to fulfill all our orders right now in the pipeline. The second initiative is I've been working both in all these three stints towards greatly bringing technology and contributing to Make in India. I think while we have a tie-up with BYD and we will leverage their technological in batteries and cells, we are looking at developing Make in India buses going forward, and hence we will participate in CESL tender as well. The third one is we are looking at EV in multiple segments. We are looking at evaluating multiple segments apart from bus. We have already made some few trucks. We are evaluating the trucking segment. We are looking at other segments and also ecosystem as well. So a strategy is being worked out in Olectra on which segment we will be able to make value add in India and how that can transform the mobility in the country. That's what we are looking at, and we'll be ready by the last quarter of this financial year so that we can start working on those strategies from early next year.
Okay, so this is going to be interesting to watch out for. I mean, you've given us all your key milestones, and I think that's what all of us are going to keep calling you and grilling you on all these milestones as to how they are panning out from here on. But thank you, Mahesh, so much for joining us on the show. Always a pleasure to speak to you from Puneet, the team, and myself right here. Kush, how are you looking at Olectra Green if I come to you today? The stock is up nearly 2.2%. It's been a topsy-turvy ride for Electra Green because the kind of surge that it saw in between cooled off afterwards. And I think probably that ride has started again. Would you say so?
So here are early days. So if you are a slightly aggressive investor, then this is not a bad idea for you to go out and accumulate Olectra Green Tech. There are signs of revival. However, what's happening is that big volumes and momentum is missing. So this would not be a quick fade. Anywhere from 6 to 12 month kind of a time horizon for targets of 1700 and about 1825, you could consider it, because as I said, there are revival signs and a good recovery from those 1000 odd levels. So with the stop loss around the 1375 mark, you could consider, but as I said, positional and in small quantities.
Well, a positional buy coming in if you take a trade, and there's a slight spike also coming from the day's lows as well. But of course, we will speak about this e-bus space as well, but we'll move on to a new sector. Time for an NDTV Profit exclusive. Two key subsidiaries of Coal India, BCCL and CMPDIL, are gearing up for their D-Street debut. This will be there likely by December. Sources tell NDTV Profit that discussions on pricing are in advanced stages. Shree joins in with the exclusive details. Shree, what are you gathering now?
Yeah, that's right. What we are picking up that the government is accelerating plans to bring two of the Coal India Limited key subsidiary Bharat Coking Coal and CMPDIL to the stock markets, with both expected to make their Dalal Street debut by December. Now, according to sources, the listing process has been expedited with consultation over floor price and over offer for price, etc. now at advanced stages. Both IPOs are expected to be fully offer for sale, through which Coal India is expected to offload part of its stake as part of their disinvestment and value unlocking strategy. Now, if you remember, DIPAM, which handles government privatization and disinvestment plan, had already given note to Coal India to sell up to 25% equity in each subsidiary. However, the entire stake may not be offered in the single tranche. The sense we are getting that the sale will be carried out in 2 to 3 phases depending on the market condition and investor appetite. And in fact, Bharat Coking essentially engaged in the mining and supply of coking coal, which are crucial input for steel and power sector. CMPDIL, which is Coal India Consultancy Exploration Arm, both have filed the DRHP with SEBI somewhere in May and June. Now, both listing expected to, of course, broaden investor participation in coal sector, unlock value for Coal India diversified portfolio. But more importantly, as things stand, if this 2 IPO, come in the given timeline, could be a major milestone in the government overall PSU disinvestment drive, especially when the government is getting sense and already stepped up plan to offload stake in a handful of PSU as global uncertainty eases, market sentiments improve, particularly amid a more stable outlook on the tariff, and that's what sense we are getting, and very crucial for the remaining part of the current financial year.
That's the NDTV Profit exclusive. Thank you very much, Shree, for giving your views on Coal India and its value unlocking. Let's just pull up the Coal India's chart as well, and we'll see the reactions happening, especially Q2 earnings have also come in, and that's why you're seeing a downtick in the stock. From day's high, it's almost down 2%. And meanwhile, this has been a tepid quarter for Coal India this time around. Numbers are below estimates. Revenue margins have shrunk, and Vansh is joining us to break down the numbers for us. Vansh, what are the numbers you are gathering? And interestingly, are there much more internals also where there's more impact coming in?
Thank you for that, Sharad. So yeah, numbers have been quite disappointing for Coal India. In fact, they have been below the estimates. If we talk about the margins, there has been a sharp contraction on the margins front for Coal India. Now it's largely the operational performance that has weighed on the net profit for the company. The EBITDA has largely been dragged by the inventory build-up. In fact, if we talk about the inventory build-up, inventory stands at 1330 odd crores versus 149 crores on a sequential basis. So clearly the EBITDA has been dragged by the inventory build-up is what we are looking at. Also, if we look at the numbers, the revenue stands at 30,187 crores versus the estimates of 30,400 crores. So clearly a miss on all the fronts is what we are looking at. And the net profit is also down by 50% at 4,300 odd crores as well. Also, company recently made their provisional September business update, and where we saw the total coal production was down by 4%, and the total coal offtake was also down by 1% as well. If we talk about the global coking coal prices, they have also been flattish on a sequential basis, and in fact we have seen a decline of about 15% on a YY basis, where they stand around in the range of $183 per ton to $193 per ton as well. So clearly e-auction realizations and regulatory price increase, capex guidance and some medium-term growth outlook will be key factors to watch out in the management commentary as well.
Thank you very much, Vansh, for giving us the entire Q2 picture. And Somit had also mentioned yesterday in our Khabar segment that the realizations would be coming down. Net, the dividend yield that comes in at 3%. That's also an angle to look at. But Kush, Coal India is largely not a trade-friendly stock. Historically seen, it's a dividend yield stock and it doesn't move so much, but this time we are seeing significant kind of a short build up happening, and this is happening in the last trading session as well, which the data I picked up from. Do you see this further cuts coming in? Kush, could you unmute yourself please?
My bad.
Yeah.
So, the stock's gone into a long consolidation phase, and it has a tendency to do so. I mean, if you recall the, last instance, when this happened, it was somewhere in the, in mid or late 2022, where it went into an 8-9 month long consolidation, and then gave a massive breakout from 230 to about 540 odd levels in less than a year's time. Very similar structures right now. So, yeah, I mean, I wouldn't really go out and buy because it's not participating in the rally that the market is having. Also, like you said, short built up, very clearly visible volumes spiking up on the downside. So if anyone's playing for a short trade, then yes, you could continue to hold for targets of 375 and about 369 as well. But long positions best avoided in Coal India right now.
Avoid for long positions by Kush when it comes to Coal India. We'll take a quick break. Stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing rooms in our special segment, Heard on the Street.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally we come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing
Welcome back. You're watching India Market Close. I'm Alex Matthew, and of course with me is Hiral Dadia and Sharad Dubey. And we've got an hour left for the close of trade. We've got some very interesting stories today. Some where there is high volume, some where there is high potential liquidity. Right? Varun Beverages?
Yeah, I mean, Varun Beverages, absolute
They have added extra liquidity.
Extra liquidity added, and I think, Kush and I were just talking that, I mean, Sharad made a point that it's Campa-Cola who's giving competition. And I said, apart from Campa-Cola, it's probably your regional players also who are coming in, who are acting as ants in the pants of Varun Beverages, which has made them change the strategy.
There you go. So Varun Beverages, in case you missed it.
Lot of liquidity.
Arguably the brand Lahori Zira, I assume.
Yeah.
They have been creating
Bindu,
a lot of
there
buzz.
is Lahori Zira, there is so much.
So in case you missed it, they've changed their memorandum and they've added that they will also be selling alcohol. And this is something that has gotten the attention of the street. Certainly, the stock is trading with gains of about 9.5%. I was looking at the chart. I can't keep my eyes off that chart. What a chart
but after
it is.
a 23-24% underperformance, I think this is absolutely
par for the
warranted.
course.
Yeah, because a new business and the season is absolutely ripe ahead of New Year's, right?
Yeah.
I mean, it's Diwali, it's Christmas.
It's alcohol and it's Africa.
Absolutely.
Okay.
It makes me remind the jingle. Africa.
Oh, there you go.
Waka waka.
Yeah,
Waka
waka,
waka. There you
waka.
go. But before we start both Sharad and Hiral into singing, and don't get me started on singing, I won't stop. So before we do, let's talk about what's working in trade today. And the benchmark Nifty 50 gaining about 0.5% or so. It's more or less held on to that mark. But the benchmark that is outperforming is one that we don't track on an ongoing basis. And this is the Nifty Next 50, gaining about 1.4% or thereabouts. These are all the stocks that could eventually make their way into the Nifty 50. And you have 39 gainers in that index out of 50. Some of the stocks that are gaining are standouts in today's session as well. So pull up the constituents if you can. I'll read off the list. Adani Green up about 11.5% reacting to earnings. Varun Beverages, we just spoke about that. That is the Nifty 50 contribution. I wanted you to pull up the stocks that I'm talking about. Varun Beverages up about 9.4%. You have IOC
which is also reacting to earnings and the potential for outperformance for oil marketing companies, up about 5.6%. Adani Energy reacting to earnings as well, up about 5.3%. Margin expansion there, and significant one to say the least. Bottom line expanding. REC up about 4.3%, reacting to earnings. Strong set of numbers there. PFC also moving in tandem and gaining about 3%. From the automotive pack, Hyundai Motor Company up about 3%. So there you go. A bunch of the winners in trade today from this index. Kush Bora with us. Kush, a number of these stocks that you've spoken about and some that you haven't. What would you pick from the list of stocks that I have just mentioned that are seemingly trading on high momentum? Where would you place your bets?
I think I'd still go with the auto pack. Something like in Hyundai, looks rather interesting. There's been a rather sharp round of profit booking after all the run up that the stock had seen. But Hyundai now starting to see some sort of recovery. Momentum indicators also turning, and volumes also picking up in the last 3 sessions that the stock's been rising. So yes, I think there is a lot of steam left in the auto pack. Not entirely convinced about the rally in PFC and REC, to be honest. These stocks have gone sideways. They keep hitting resistance levels and then sliding back. So if I did have any positions, I would actually rather look to take some money off the table, or perhaps, at best hold with trailing stop losses, but not initiate fresh positions. Auto pack, something like a Hyundai, still the space to go, in the Nifty Next category.
So those are stocks from Nifty Next category as well. Hyundai, one should be watching out for. A couple of stocks that are buzzing on the back of earnings and pretty interesting moves that we are catching. One just picked up, I think, 3 to 4 stocks which are probably on everyone's radar today on the back of earnings, on the back of volumes and the kind of reaction. Vansh, which are the ones that you've picked and what's happening with them?
Well, thank you for that, Hiril. So firstly, let me start off with Mahindra and Mahindra Financials. Now, again, a good set of numbers from the company. Now, the profit has been supported by the stable asset quality and improving margins for Mahindra and Mahindra Finance. Now, the credit cost has remained elevated. Now, this was due to the monsoon trend that has taken place recently. If we talk about the margins, that were driven by the lower cost of funds and higher fee income for the company as well. Lastly, if we talk about the asset quality, it also remained stable. If we look at the numbers, we have seen the net profit was up by 45% at 564 crores versus 389 crores. Also, if we look at the credit cost, it was it has increased up sequentially at 2.2% versus 1.9%. And lastly, if we talk about the return on asset, it has largely remained flat sequentially at 1.6% as well. Second on my list is Star Health Insurance. Now, the poor set of numbers from the company. We have seen continuous challenges from the intense competition from the peers in the similar industry. And if we talk about the market share, now the market share has been stable on a YY basis and the provisions have remained elevated for the company. However, we have seen some strong premium growths in the first half of FY26 for their agency business as well. If you talk about the numbers, we have seen a net premium earned that was up by 10% and the net profit, now that was down 50% at 55 crores versus 111 crore. So clearly a disappointing set of numbers is what we are looking at for Star Health as well. If we also look at the brokerage, now the Investec has maintained a sell rating on the stock with a target price of 425 rupees as well. Third on my list is Credit Access Grameen. Now the company has again reported a muted set of numbers. However, the asset quality has improved. If you look at the numbers, the net profit was down by 32%, clearly a big negative. And if you look at the asset quality, now the gross NPAs and NNPAs have inched down sequentially at 3.65% and 1.26% respectively. And lastly on my list would be Adani Green, a strong set of numbers from the company. There has been a higher energy sales and improved operating efficiency for the company. Also, if we talk about the operational capacity, it has increased by 49% on a year-on-year basis to 6.7 gigawatts as well. The company is aiming to reach 50 gigawatts of capacity by FY30 as well. Lastly, if you look at the numbers for Adani Green, we have seen the revenue was flat at 3,000 crores. However, the EBITDA was up by 17.5%. The margins were at 86.5% versus a 73%. So a huge spike in margins is what we are seeing. Lastly, if we talk about the net profit, it was up by 25% to 644 crores as well. So clearly a strong set of numbers is what we are seeing for Adani Green as well.
Whole host of stocks that are reacting to numbers and certainly some impressive numbers to say the very least. Aditya Shah, Hercules Advisors, joining us on India Market Close. As always, Aditya, thanks so much for taking the time. You look at the financial space very closely. I want to ask you about REC. The results came through. and the stock is abuzz on the back of those results. And on the flip side, you have Credit Access Grameen, where every quarter you try to find a bottom and you hope that the asset quality issues will be resolved. Yes, there has been an improvement, but certainly they've not been able to resolve the bottom line situation where things have not gotten better. So where would you draw the line and say that, okay, this is the bottom and you can buy right now?
With Credit Access Grameen, I don't know. There have been a lot of asset quality issues within the company, and that continues to plague the company. In lending, nothing is more important than asset quality. And Credit Access Grameen, being a microfinance lender, microfinance sector is facing huge set of NPAs. Although the NPAs have bottomed out, but some companies face a lot of issues, especially in Credit Access Grameen, because a huge chunk of their business also comes from Karnataka, where there's political intervention on how NPAs must be resolved. So from my perspective, microfinance space is the space to bet on right now, but I don't think Credit Access Grameen is the stock to look at. Although the loan growth was really very strong, asset quality will take time to improve on this company. So from my perspective, better players within the microfinance lenders are available. With respect to REC, I have not been able to look at the results properly, so will not be able to comment there.
Interesting take when it comes to Credit Access Grameen. But Kush, a quick one. What's happening with the Adani? You know, I mean, 11 to 12% up move coming in on this counter on the back of a good set of numbers. You're talking about Adani Green. REC also strong moves. All of your renewable energy players are, the ones which are actually buzzing in trade as well. Any picks that you have here?
So even before that, let me just give an umbrella view, which is this is why I don't prefer trading just before the results, because it's a binary event. While M&M Financial and Adani Green have done nominally well, and they've just overshot, and you would feel very happy about buying into some of these. Look at a Star Health and a Credit Access Grameen. In fact, see the 5-day setup of Credit Access Grameen, good up moves, volume back, and it's given a lot of those gains up. Hence, I don't generally recommend trading just before the results are out. Now that said, I think Adani Green was consolidating for the last month. The resistance band was 1070. That's been broken, and you're seeing the positive impact of the results as well. I think this rally could stretch to about 1050, 1070 odd levels. That's where I would book my profits, because that's the near-term swing high. REC, like I just said, REC, PFC, I am not entirely convinced about the moves. Even today, if despite the result impact, the stock is still trading below those resistance levels of 385, 390, just about there, but not quite crossing those. So I would look to perhaps just hold on to my positions or exit if I held them for a very long time and they are close to my buying price. But the momentum yet to pick up in both these.
Kush, I'm going to interrupt over here, because Varun Beverages is up almost 9 to 10%. In fact, we're just going to quickly cut into the conference call right now and understand what the management is indicating, because they are saying that the base business competition is good and healthy. They're expecting the markets to double or triple in the next 5 years. And on the 10 rupees price point, they believe it is absolutely aggressive. So how sustainable is that going to be for competition? And what will happen to a Varun Beverages on the back of that? Let's quickly listen in to what they're saying.
And all of that. There is also another thing in your release which talks about, noodles and milk preparations, milk powder and all. Can you just elaborate, frozen food, etc.? Can you just also elaborate on that, because that doesn't have a mention in the presentation?
No, because we don't want to go again and again to the market. So we are just making the portfolio available to us, and we are looking for expansion. So whenever we get an opportunity, we have kept ourselves ready to go forward with it.
So, for example, let's say PepsiCo Foods, are you referring to that side of, the portfolio when you say instant noodles and...
No, Pepsi snacks, PepsiCo does, so we will not compete with our parent company, and those products will never do. And the rest we are open to, look at it if anything interesting comes.
And that comment is specifically for overseas market or for India as well, Mr. Jaipuria?
I mean, for the time being overseas, but it's open. We are open to India also.
Okay, got it. Thank you, and wishing you all the best.
Thank you.
Thank you. Our next question comes from the line of Avnish Roy from Nuama. Please go ahead.
Yeah, thanks. My first question is on the GST transition impact. Number one company, HUL, called out impact in Q2 and even in October month. So if you could clarify in your GST impacted segments, what was the kind of impact you have seen in both Q2, which is say September quarter, and in October month?
Well, it affected slightly in the September quarter because a lot of people could not initially understand it and everybody downsized their stock levels. But we were able to make sure that the goods were sent to them after the GST date, and it affected for a few days, and then of course Diwali affected a little bit. But otherwise, it was not a major issue for us.
Sure. My second question is on the international volume growth, which is decent at 9%. So if you could clarify how things are shaping up, which geographies are doing really well there. And second is on this Carlsberg tie-up, how big is the opportunity? It's looking really interesting. So what made you go into this kind of tie-up, and how big is the opportunity in Africa? In some other countries also currently it's a smaller opportunity, but how big is the opportunity from longer term?
So first of all, for us, the growth in Africa are coming back. Our challenge was in Zimbabwe at one point because of the sugar tax. The prices had gone up and the consumption had dropped slightly. We have covered that up also. Now Zimbabwe started growing back. Morocco is doing well for us, and South Africa is doing extremely well. We are growing in double digits and mid double digits, which we are very happy with. And going forward with the backward corrections and all, we see South Africa to be becoming an important part of our territory in Africa. Your other question was regarding beer. And see, in Africa, we don't have the challenges what India has, that restrictions from the government that it has to be a separate, and so we have the same go-to-market. Our trucks can be loaded on the same trucks can be loaded, same people can sell the products, so it becomes much easier and much without extra expense expandable. And there is a huge scope on that. Most of the countries, there is individual players running beer business in the country, so it's a golden opportunity for us. We are going to test the market, and hopefully as soon as we see the tests coming right, we'll go forward with it.
One follow-up question there. So you mentioned go-to-market is common. The employees also can be used for the same new business. But in terms of end distribution, how much is the opportunity which is available, or the end distribution is different in terms of the
distribution is also, most of the stores are allowed to carry alcohol. So especially beer, most of the stores are allowed to carry. So it won't be 100% the same, but a lot of it is common. So it helps a lot.
And Carlsberg is already big in India. So as of now, we should not draw any inference to India tie-up, right?
No, nothing to do with India. Nothing to do with India right now.
So last question on the new announcement.
And obviously the selling teams are separate, but the infrastructure, some of the things can be used in Africa commonly.
Right. Last question on the new announcement. So Alcobev opportunity in India, how big can that be? A lot of approvals needed. Coca-Cola announced similar thing around 19 months back. We have not seen very high visibility in terms of advertising or in terms of distribution. So is it more of range completion, or do you see that this could become longer term big even in India?
Well, RTD and low alcohol products are becoming large all over the world, and there is a good scope here also. In India, you can't advertise, so as it is, you can't advertise any alcohol products. So, I mean, we have kept ourselves open, and hopefully we look at it. We are starting with Africa, and let's see what we can do in India.
And is this big for Pepsi in other emerging market, or quite nascent?
Well, they are also just starting with RTD, so it's still very nascent and everybody is looking at it long term. So we don't want to keep on going back again and again to the market for it. So we've taken approval and we are talking to Pepsi if we can start with some of their RTD products.
So thanks. That's all from my side. Thank you.
The management clearly stating that the focus for the Alcobev business would be in Africa as well. And Hiral, there is a direct distribution exclusive agreement, right, coming in for Carlsberg. And I think you have done some channel checks also on the ready-to-drinks market. What is your view on that?
So, yeah, with Carlsberg, mainly it's going to be with regards to where Africa goes. And when you talk about the ready-to-drink market...
In India.
In India specifically, what's happening is a lot of smaller players, niche players who have tried to come in. But the sustainability is not there because the market is still not mature enough to understand the ready-to-drink space. Secondly, the Gen Z, as Alex was just pointing out right now as well, is not geared towards alcohol to that extent now. So the quantum of alcohol consumption in that age group is also going down. And the moment you move beyond that age gap, because your RTD segment is a segment which is mainly for that 22 to 26, 28 kind of a range. That's already moving away. So I think this is a market which, as Mr. Jaipuria was mentioning, has to yet mature. Yes, there could be potential opportunities around the world. Whether India follows through or not is anyone's guess.
Yeah, okay. So interesting conversation. You heard the management right here on NDTV Profit. We'll bring you more updates. Our team is listening in as we speak right now. But let's go across to Somit Sarkar, who's joining us to tell you about the chatter from the dealing rooms in the regular segment heard on the street. Somit, what are you picking up today?
The up move that started in market yesterday in the last half an hour has continued in trade today. But despite this a strong up move that we are seeing in overall market, L&T is one counter which is seeing continuous selling pressure ahead of its Q2 numbers. Now, what dealers are indicating is that the numbers are expected to be on the weaker side, but commentary is something that we should watch out for given the fact that historically, second half has been much better for L&T. So, any positive commentary or any strong commentary coming in from the management side could lead to an upside in the share prices tomorrow in trade. So, keep an eye out for L&T. For United Spirits, there are buy flows on PMS desks. Dealers are expecting some positive corporate development to be announced very soon for United Spirits. For Tata Consumer and ICICI Bank, for both these counters, there are buy flows on institutional desk is what dealers have indicated. Both foreign and domestic institutions have been buying this counter in trade today. And when it comes to Intellect Design and Sarda Energy, both the counters on the cash side, there are buy flows on the HNI desk. Dealers are expecting the second quarter numbers to be quite strong for both the counters. And for Dr. Reddy, the stock is down in trade. Now, there's a buzz on the street that the semaglutide launch in Canada could be delayed, and that's the reason the stock is under pressure. But what dealers have indicated is that there could be a delay, but it might not be more than a week or so. So keep an eye out for Dr. Reddy. We could see some sharp moves on the upside as well if the delay is not much longer than a week or so.
These are interesting, and Dr. Reddy's, in fact, I was just wondering when we started off the closing show as to what has led to this 4% decline, the top loser on Nifty 50. And here we go where Somit gets us all the khabar in terms of the delay with regards to semaglutide that could be happening in Canada. But Somit, stay with us. You've been talking about OMCs over the last couple of trading sessions, and IOC has been on your radar as well. That stock today on a tear. What are you picking up?
Well, when it comes to oil marketing companies, for the last couple of sessions, we have been continuously saying that there are multiple triggers at this moment. Firstly, it's the rising gross refining margin, Singapore gross refining margin, which is the Asian benchmark. In the last 10 trading sessions or 10 sessions, it has increased from $0.4 to nearly $8.4 per barrel. And this strong up move could result into stronger refining performance for the oil marketing companies in the third quarter of FY25. Just to give some number, every $1 per barrel rise in the, if you look at every $1 per barrel rise in the gross refining margin benefits IOCL's EBITDA by around 11%. IOCL stands to benefit the most out of this, followed by BPCL and HPCL. Now, IOCL stands to benefit most because the refining segment contributes the most compared to BPCL and HPCL. But the smaller refiners like MRPL and Chennai Petro, for them the delta is much higher. In fact, MRPL's EBITDA increases by 24% with every $1 per barrel rise in the gross refining margin, and for Chennai Petro, it increases by nearly 26%. So that is one reason, there is a rising gross refining margin. And the second reason is strong set of numbers. MRPL, Chennai Petro, Indian Oil Corporation, all three of them have reported a beat compared to what the street was estimating. And moreover, Indian Oil Corporation on its call also mentioned clearly that from November 1st, they will start getting the LPG compensation, which should also lead to higher or much stronger second half of financial year FY26 for the oil marketing companies. So these are broadly the positive pointers that have come in over the last couple of sessions that has led to this up move for oil marketing companies in trade today.
Very interesting. Thanks so much, Somit, for getting us those details. IOC, of course, leading the pack, but you have Chennai Petro, which is losing some steam. And this is on the back of the gains that it has recently, I would hazard a guess to say. But Kush Bora, does the chart bear that out? Some profit being taken off the table today. And how do you approach this space? Which would you buy?
So, Alex, a lot of these names, sort of tend to react to news and then give away those gains. So I would be a little cautious in terms of, building on fresh positions. Chennai Petro was doing well. There were some negative divergences. I would actually look to accumulate this, but at lower levels of 775, 780. Right now, what we're seeing is more of profit booking. So on the whole, not a big fan of the, entire OMC pack. Any bounce, and I would take that more of, and by that I mean the IOCs and the HPCLs of the world. I would take that as an opportunity to book some profits and lighten the positions there.
All right. So bear that in mind when you decide to play that IOC and oil marketing company theme or downstream company theme. Let's go to a Bulls versus Bears segment, and we've got an interesting one for you. Stock that is outperforming in trade today, and that's Blue Dart. It's up in double digits. In fact, at this point, 16.3% at the high point of the day on the back of strong numbers in the second quarter. But Jasmeet is joining in to tell you about the Bull versus Bear scenario. Jasmeet, which one is stronger?
Well, right, thank you for that. Now, a good set of numbers for the company. We see margin expansion. You also see that uptick for the revenue as well. Now, in terms of the bull and bear case, the best revenue and EBITDA in last 12 quarters, proving a strong momentum for the company. Well, on the other hand, we look at the bear case, there's still cost pressure and limited growth in terms of volume could further hinder the margin growth going forward. And given the company has had a history of softer margins, we look at the second bull case, we see that the GST cut is expected to boost the overall spending by the individuals and increase the growth momentum for the company. But on the other hand, the increased price by the company, which was announced previous month of 9-12%, could impact on the SME traders in this particular segment. If we look at the next bull case, the company has launched 2 new products in this particular quarter where they announced an onboarding platform for the sellers as well as a quick delivery platform in Haryana. Now, given the again increase in prices and the softer flow could impact the SME traders going forward. If we look at the other bull case, we seasonally stronger Q3 for the company given the festival season and the Q2 momentum to continue going forward. But the bear case would be the overall industry has seen a consolidation and the competition in the industry could hinder the growth. Now, in terms of the valuation, we see that the company's valuation are in line with the competitors, and the recent DII interest in the company shows a good move, given HDFC increases the stake to 5% in the previous month, and also Radhakrishna Damani holds 1.2% of the company, shows a strong growth and a strong future for the company. But on the other hand, we see that the overall pact of delivery and the other industries is down at the 1-year low. This could be a concern for the company. If you look at the buy and the sell rating, we see that MOSL maintains a buy with a target price of 7,200. But on the other hand, we also have Elara Capital, which maintains a sell call with a target of 5,132. If we look at the overall brokerages, we see the positive that the buy stands at 6, while there's 0 hold and 1 sell with a limited and potential of 4%, while this comes in after the trend of stock moving upward today in trade. So all in all, a good set of numbers for the company.
Thanks a lot, Jasmeet, for that wonderful research. Aditya, good afternoon. Sharad here. There are the logistics space itself. If you look at it, Blue Dart has done really well in the day's trade. There is a good catch-up in other logistics companies also. Q3 is a strong quarter as well. This entire pack, which place risk-reward ratio is favorable and fundamentally which looks good on the medium-term or long-term basis?
So I don't have this this sector entirely, so will not be able to comment on it.
All right. If not logistics, I know new age tech stocks, so you do track, and Of course, in the primary market, there's a lot of action happening, but secondary market also, new age tech stocks, if you have a look, anything good?
My perspective, Zomato is doing pretty well there, but Zomato's valuation is extremely expensive. Other than that, I don't think any of the new age stocks really particularly interest me. Lenskart's IPO also is coming at a crazy type of a valuation where it leaves little for the retail shareholders. Rather than that, I would tend to look at the capital goods space or the chemical space or the financial as well, where on the EMC space today, on the compression of expense ratios, most of the stocks like HDFC AMC or Aditya Birla AMC or a UTI AMC are down. So that is where I will look at, and financials, especially on a contra pick for the microfinance space, that looks really very interesting. Not particularly too much enthusiastic about the new age tech companies.
It's pretty interesting. Capital goods, financials, and select chemicals also. That's an interesting take coming in from Aditya. But let's take a quick break. On the other side, we get you top buy today, sell tomorrow picks. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top.
Welcome back to India Market Close. Interesting moves coming in on the Lal Street. In fact, let's get in Shivangi Sarda as well from Motilal Oswal. Shivangi, afternoon. Welcome to the show. Always a pleasure to speak to you at NDTV. What should the strategy look like that we are sustaining above that 26,000 mark in trade today? And what would your topics be?
Thank you for having me. We've seen that indices have been cheering, way ahead of the festivities again. We've seen that, October series ended on a good note. We've seen short covering in the entire series, and November begins on a very fresh note, which indicates that, there has been fresh buying at these levels. So overall, there has been unwinding of the call writers at the higher levels, which is quite positive for the index. And we've seen broad-based buying, which is, again, adding up to the strength. So we are recommending a buy on decline for Nifty here to touch the recent, the all-time high levels, of course, at, 26,277 and then higher. And supports have now shifted higher to 25,900 marks. So these levels would be crucial to watch out for the index. Now, Bank Nifty has, of course, outperformed in this entire rally from the last, 15 odd trading sessions. And we've seen that, the private banking names have had really positive rollovers from the October series as we head into November, which is, going to be the pillars for support here in this index. Of course, Bank Nifty has consolidated from the last two trading sessions, but the good part is that support is quite strong at the higher levels, and we are looking at the next upside towards 58,750 immediately, and then 59,000 levels for Bank Nifty, with a support of 58,000 levels, which will also act as a make or break zone here for this index to decisively, measure the next leg of rally in the next couple of sessions. So this would be important to watch out for in this.
Okay, and Shivangi, what stocks specifically are you looking at that could be bought right now?
Absolutely. So stock-specific ideas, first up on my radar is Vedanta. We've seen metals have been shining like ever. And Vedanta has been one stock which has resiliently held on from the last 9 odd weeks. And we can see that there is fresh buying that can be seen here. Of course, from the last 4 trading sessions, we were seeing significant increase in the volumes, but price conversion wasn't happening. Today, we've seen that price and volume both are, doing quite well. Now, it's trading above all its key exponential moving averages, so looking quite positive, and we're recommending a buy here with the next potential target of 540 levels and a stop of 508 levels. And the next pick on my radar is Bharti Airtel, which has been the leader in the entire telecom space. And, this stock has touched an all-time high level. And we're seeing continuously bulls have been active at any minor declines. Of course, the entire, strength can be seen in the long term as well as the short term charts. And with, of course, 82% market share, this is quite a strong counter in this entire industry. So we're recommending a buy here with the next potential target of 2180 levels and a support of 2060 zones.
Okay, thanks so much for that, Shivangi. Now, we've been talking about earnings all day today, and this is no different. We're talking about Shree Cement, and it's a big miss in the quarter for the company. Margins have shrunk, costs have bitten, and the brokerages are split on the outlook going forward. Is the company's value over volume strategy starting to backfire is a question that a lot of them are asking.
And I'm sure, everyone's going to be wondering as to why are we doing this piece when the stock is up 2.5%. The only reason why we need to do this piece is so that investors understand what are the negatives that one should be watching out for as well, and just not go with what optically is visible. And that's the reason why I think Puneet is going to get us this piece.
No, absolutely, because if you don't know the context, and you simply look at the margin picture, for example, there is a 5 percentage point increase.
Yeah, I mean, for me, when I saw the 3-digit profit number versus a 2-digit profit number, I went gung-ho over it post-market as yesterday, till I realized that these are the negatives one should be watching out for as well.
But it's all in the details, and I think Puneet will be getting that.
Exactly. So on that note, perfect opportunity. All 3 people have introduced you, Puneet, today. You must feel really special. So what specifically are you looking at in the details?
Well, thanks to all 3 of you for getting us that perspective. But largely, it's rightly what you said. While there has been a sequential as well as on a year-on-year basis, huge jump in profits for Shree Cement, there are a couple of key aspects. It has missed estimates. This was expected to be a decent quarter, while the monsoon one, it was expected to be a decent one for the company, but it has missed estimates. There's been sequential profit as well as margin decline in terms of Shree Cement in this particular quarter. When you look at the higher expenses, that has dragged the profitability, and while the margins have improved, it is the EBITDA per ton is still below the estimates of what Street was working with. The other key aspect is that higher expenses has also led to impacting its profits, and this has also impacted the margin picture of the company. When you look at the strategy for actually prioritizing realizations versus volume growth, so even though the volume growth was 4 to 5%, the company had a better performance in the EBITDA per ton picture, while still below the estimates of what the analysts were working with, and hence while we are seeing a positive reaction, there are a few key aspects they need to watch out for. 1078 is what the EBITDA per ton was versus 780 in the same time last year, but this was expected to be slightly above 1100 rupees per ton by most brokerages, and hence there was also a one-time impact of 30 rupees per ton which the management saw, and hence you are seeing that impact on the EBITDA per ton. Finally, in terms of cost also, they inched up quite materially in this particular quarter. On a quarter-on-quarter basis, the power and fuel cost was up 3% while it was flat on a year-on-year basis, but freight costs are up 2%, raw material cost specifically is up 27% on a YY basis, and the other expenses have also inched up 13% on a quarter-on-quarter basis and almost 11% on a YY basis. So therein lies the key details about the EBITDA per ton. The other aspect is of prioritizing, as we mentioned, realizations over volume growth, just 4% of 7.9 million tons versus industry average of 3 to 6%. So while we're waiting for the number for others, this could be the one where you see lower volume growth for Shree Cement. Kotak brokerage is actually given out a very interesting aspect. They actually feel the value over volume strategy may be challenging to sustain for Shree Cement in this time, and they have specifically mentioned that it impacts the guidance of the company as well. They are expecting 3 to 5% volume growth for FY26, but a lot more pressure on H2 to meet that guidance. So that'll be something, if they can actually meet the guidance, that'll be something to watch as well. Capacity expansion is the other one. Sales is expected to be 38 million tons in FY26. Capacity is expected to reach almost over 69 million tons by the end of the year and 80 million tons by FY28. But they have actually gone ahead and mentioned that the capacity might now be actually stretched down to FY29. So therein lies the key details that there would be a lot of capacity coming for a whole range of players in the cement space, and overcapacity could be something to watch. Finally, in terms of brokerages, they have largely remained on the sidelines in this particular quarter. They've maintained their view, but a few of them have cut target prices. I've just selected a couple of them because of the very interesting aspect they mentioned. Investec has a target price of 29,125, and they have mentioned that the premium multiples is essentially a reflection of the mode that the company had in terms of the capex intensity, but that might actually be waning off now. Both aspects have seen erosion according to them, and Jefferies have also mentioned that the stock outlook will only improve post the industry cement prices improving in March and April quarter. So herein lies the key details, as you guys mentioned. While the stock is up because of the huge capacity expansion we are expecting over the next 3 years, investors largely remaining on the sidelines for now, and that's the picture coming in on Shree Cement.
All right. Thanks so much, Puneet, for that. And several details that you should therefore watch out for. Aditya, do you have an opinion on this? And if not this, could you give us your opinion on the cement space, and which would your pick be here?
So within the cement is a extra competitive space. There's no moat as such any company has. Companies may make regional dominance, but overall companies don't have any moat here. My topic continues to remain UltraTech Cement. If it were not for the expansion in FMEG and other products that UltraTech is really doing, UltraTech could have traded much higher. So from my perspective here, you need to stay with the market leaders. It could be UltraTech or then Dalmia Bharat, where Dalmia Bharat does have a regional dominance in the east. But within the cap goods space, road constructors and infrastructure space continue to be a higher pick than the cement place. There is no uptick in the prices of a cement bag, and that is affecting the EBITDA per ton of all of these companies. So from my perspective, companies like Larsen, where in the EPC space they are doing really well, that is something to watch out for. Mind you, Larsen has hit a new all-time high of 4,000 today.
Okay, so that's with regards to L&T. In fact, the company will be reporting numbers as well. In fact, a couple of stocks which are buzzing from the small cap space, which are widely covered in our 1:30 show, which is the small cap buzzers. Anushi takes us through all the details. Anushi, what are the buzzers? How are the volumes picking up?
Right, so three counters in focus here. I'll start off with something like a Novartis and Dredging Corp, which have seen volumes ranging between 4 times to 33 times if we just take the 1 month in context over here. So I'll start off with Novartis first. Now here the volumes are up over 4 times. They are primarily engaged in the business of wholesale of pharmaceutical and medical goods is what we are looking at. In fact, they import various medicines to India from different sources across the globe is what we are looking at. Currently, the company has exclusive and sales and distribution arrangement with Dr. Reddy's Laboratories, and this is for the established medicine brands, including the Wolverine range that we are looking at. So Novartis in focus on the back of that news. Along with that, even Dredging Corp, if we see on this counter, we are looking at particularly high trading volumes. In fact, the stock also hit an intraday high of around 13%. But considering the 6 month of an upside, it's seen about a 21% of a gain also. Just while there are no fundamental drivers in place for today's up move that we are looking at, a couple of recent updates in focus. They've appointed the new managing director and CEO for a period of around 6 months. Along with that, they've also signed a MOU with Mumbai Port for maintenance as well as dredging related works. So that's Dredging Corp in focus. Lastly, coming to Infobeam Technologies, which has seen about a 10% of an uptick in trade today. In fact, the stock has seen its share price more than doubling in the last 6 months as well. It's a strong performer here. The revenue and margins did see an uptick in terms of where the financial performance is concerned. Even the optimum utilization helped that margin improvement level that we are looking at, and the demand is strong across all the key geography it has had. Along with that, they've onboarded 3 new clients. So these are the 3 stocks that we spoke about in Small Cap Buzzer show as of today.
Thank you very much, Anushi, for this. And interestingly, Dredging Corp has done well in the day's trade. Of course, Infobeams, it's an upper circuit. Shivangi, good afternoon. Sharad here. We discussed cement stocks earlier as well, and Dredging Corp also is there. Out of these 2 packs, any risk-reward ratio, any good stock you're seeing? We could see a good up move coming in. And this can be a positional call also, because these counters generally are positional counters. So Shivangi, anything here for Dredging Corp or anything in cement?
Yes, Sharad, thank you. We've seen that, cement stocks have kind of gained attraction, but, out of the entire pick, my focus would be on Cummins. We've seen, of course, little related counter, but the kind of bottoming out structure that we've seen here on the weekly basis has been quite strong, and the kind of follow-up is very strong above the key exponential moving average. And there has been, strong buying even after the breakout, which confirms this uptrend. And we're looking at the next potential targets of 4,500 for Cummins on an immediate basis. And of course, if we are looking at a little positional level, then 4,600 is what we're looking at, with a support of 4,250 zones.
So that's the view coming in when it comes to Cummins as well. But moving on, L&T will be reporting numbers in today's session. Aditya did give his view on this one. Let me quickly go across to Anushi, who's still standing by to tell us what are the key expectations, because the stock is very interesting right now. Like, if you could just pull that one on the screens. It started to climb again right now, it's still in the negative, but there you go, the kind of recovery that's coming in from the day's lowest levels. Anushi, what's expected?
Right, so double-digit growth is what we're expecting on the street right now. 40 to 15% is the kind of revenue uptick that can be expected. While margins, we see some bit of that impact due to the ITS segment is what we are looking at, along with the finance segment. But apart from that, if you just take the core business in account, it's a flat growth that we are looking at, while net profit is expected to see about 18% of a growth. Now, what we should be expecting is Goldman Sachs. Now they're saying that they're projecting about a 15% of an order inflow growth versus the guided level of 10%. In fact, the order inflows are expected to remain on the elevated side with 2 ultra mega orders in picture. These are 15,000 crore plus of orders that we are looking at. Apart from that, focus should be also on the order prospect pipeline, considering the fall in crude prices, how that would pan out for the hydrocarbon business, and the Middle East region is something that we'll see. Along with that, with the domestic capex trends also should be in focus, considering the GST rate cuts that have taken place. Would there be muted capex impacting the order inflows for L&T is something that we'll see. Update on sale of loss-making Hyderabad Metro, along with that also is something we should see. Along with that, even the outlook for the new areas that the company is focusing on, that includes data centers, new energy, as well as what would be interesting is the article suggesting that the company is planning an entry in the EMS side of the business. How that could disrupt the potential players like Dixon or Sirma, which are already there in the place, is something that we should all be watching out for the company's results, which are slated later today.
Okay, all right. And we'll bring you all of those updates. Anushi, thanks so much for getting us that preview. We'll bring you those updates live and we'll discuss it tomorrow as well. So watch out for that. In the meanwhile, speaking of tomorrow, Shivangi, anything that you would buy today and sell tomorrow?
For BTST, I would actually look at Bharti Airtel. The way it is closing with very strong, momentum, which is to continue even now, is remarkable. We've seen that volumes have added up in the last couple of hours, especially, and it is kind of giving, closing above at the higher zones itself with good, strong follow up. This is one stock which is looking quite positive. I'm looking at the next potential targets of 2180 here with the support of 2060.
Okay, so that's with regards to Bharti Airtel. In fact, yesterday, the Africa business numbers also did come in for the first half. So Bharti Airtel is a stock that is in focus. But moving on, a few of the other names which are buzzing in trade. Let's just pull up counters. 5-star, again, 14% up move. HCG seeing gains of around 10%. Genus Power, in fact, it's the power pack which is really buzzing in trade. If I talk about all the power sector names from, equipment manufacturing companies to generators buzzing in trade today. Shivangi, anything that you like from the power pack?
From the power pack, of course, Hiral, there has been a lot of action today. We've seen Power Grid gain so much of open interest today. Along with that, we've seen a bullish engulfing candle formation on the daily frame. Of course, it's quite volatile, but overall Power Grid is well placed for a good short swing. Of course, it's a trader's call, so it would be important to put a stop loss near 290 levels with an upside potential of 303.
Power Grid is the pick coming in. On to profit intelligence. SEBI proposes a mutual fund fee revamp, raising initial TER slabs by 5 basis points, cutting brokerage caps and excluding statutory levies from TR. But what does this mean for AMCs and brokers? My colleague Vansh joins in. Vansh, what are you gathering? The AMC stocks have been actually falling in trade as well. What are the entire impact analysis?
Well, thank you for that, Sharad. So yeah, SEBI has proposed revisions to the total expense ratio charged by mutual funds. Now the statutory levies like STT, GST, CTT and stamp duty are proposed to be excluded from the total expense ratio limits as well. Now the exit load related 5 basis points expense will be removed. Now this move aims to make cost clear for investors. Also, the brokerage caps are proposed to be reduced to 2 basis points for cash and 1 basis point reduction is proposed for derivatives. But let's get to the interesting part, like what's the impact on the asset management companies as well. If we look at the impact on the asset management companies for HDFC AMC, Nippon AMC, AB AMC and UTI AMC, there can be an impact of about 7.6 to 8.3% impact on their profit before tax as per FY27 estimates as well. Also, if we talk about the distributors, now if the distributor commissions are cut, now we can expect a negative impact on Anand Rathi, 361 and Nuvama, which as these stocks can see earnings cut going ahead. For Anand Rathi, a 5 basis point cut in the commissions could lead to a 4.8% hit on their earnings. For 361, a hit would be about 2.5% on their earnings. And if we talk about the Prudent Corp, now this will get impact in the range of 7 to 8%. So clearly this is the likely reason for the stock getting hammered in trade today as well. Lastly, if we talk about the brokerage and transaction cost limit, now this has been revised down sharply and this will be materially negative for players like Nuvama Wealth, where it can expect a 10 to 15% of it on the revenues as it comes from the institutional equities business. And lastly, we have DAM Capital, where 30% of the revenues come from the institutional equities business as well. So this is how the overall picture is panning out for the asset management companies as well.
Okay, so those are asset management companies that you should be watching out for. I think, Alex, you had a couple of conversations as well. Your key highlight in terms of impact?
So in terms of impact, I spoke to Ashish Somaya, who is the Chief Executive Officer of White Oak Capital. And according to him, I was asking him, what is the bottom line for you as an investor, and not an investor into the brokerage companies or the AMCs, an investor in mutual fund schemes? What is the impact? It could be anywhere between 15 basis points and 20 basis points. So it's a positive for you, but it's not a positive for the likes of Nuvama or, in fact, even an HDFC AMC, Motilal Oswal, Nippon Life, all of these EMC companies. Aditya, a quick view on these ones. Would you use the opportunity, because ultimately this is a long-term growth story, sunrise sector, etc. Would you buy any of these?
So definitely yes, mutual funds will do well. That's the only asset class which offers retail investors access to equity markets at a very cheap rate. This compression in expense ratio was a given. As the AUM keeps swelling, mind you, the AUM has grown about 5x to 10x in the last 5 to 7 years. Mutual fund companies cannot be charging the same percentage of AUM fees. It has to slowly and steadily on a glide path continue to come down. So this is practically not a surprise. In fact, I had written about this in 24. As the AUM continues to swell up, SEBI will come in and try to reduce the expense ratio for retail customers. So from my perspective, this is a buying opportunity. I think these stocks will take a time correction in the shorter term. However, in the longer term, HDFC AMC does look good. For that matter, Nippon AMC also looks good. But I believe there will be a 6 to 12 months of time correction now on all of these stocks until the new expense ratios come in and market understands how will the percentage bottom line get hit. However, on an absolute basis, these profitabilities will continue to improve as the AUM continues on a growth journey.
All right, thank you very much, Aditya and Shivangi, for joining and giving both your technical and fundamental perspectives. But coming back to the markets have done really well in the trading session and comfortably ending above the 26,000 marks. That's what we are expecting. Even Nifty Bank, a good up move, not as much as Nifty, but still comfortably above the 58,400 levels of mark. Also, let's pull out the Nifty heat map, how the Nifty stocks have actually performed. Of course, strong performance coming in from Adani group of stocks. And the power stocks, they have also picked up. NTPC, Power Grid, these stocks are up in trade almost 3% ONGC and Adani Enterprises also make it to the list. But net, if you have a look, most of the green is there and the positivity is coming in towards the majority of the numbers. But Dr. Reddy's and Coal India, they are taking the significant brunt. Eternal has been on a fall, and this is happening for the last 8 to 9 trading sessions as well. Also, Nifty, after the Nifty heat map, let's just talk about the bulls and bears. Overall, the market size, how it's actually looking like. Let's pull up the advanced decline ratio to have that concern, and it's significantly up. If you could just compare that, advances decline ratio almost 2:1 on the broader markets, and that is very supportive today. Nifty Midcap 100 index also touched its 52-week high levels. Let's just pull out the broader indices charts as well. There we'll have the entire move happening, and we see the Nifty Midcap 100 index that has actually outperformed, and this is happening in the second hour of trade. Let's just pull up the charts of Nifty Small Cap 250 and Nifty Midcap 100 index, then we'll realize where they're actually falling. Also, the BSE contribution, let's look at that since the charts are not coming, but the BSE contribution numbers, Blue Dart, that has gone up 20% on back of earnings. Adani Group stocks have done well. Varun Beverages on the expansion plans and entering the alcohol business as well. Interesting commentary in the con call. While SAIL, that's also jumped 6%. We have seen majority of the steel counters and ferrous counters doing well in the trade. Cohance Life Science, there has been an exit in the management, and all the financials which we are discussing, the capital market goods, all of them actually falling apart as well. Let's see the mid-cap chart. Again, is the second straight day we are seeing the ending at day's high level. That means the broader breadth of the market is improving as well. So this is the entire picture we have given you of the whole markets. But cues for tomorrow, they are very important. Eye on the globe, Fed's fund rate, that's going to come in. We're expecting a 25 basis points rate cut. FMC statement, whether it will be dovish or hawkish, that's more important. Shares coming out of their anchor lock-in, these are the names which you will be tracking. And interestingly, earnings will be there as well. Post-market hours today, we are seeing L&T's numbers expected to come in, so that we will be tracking. Apart from that, HPCL, BHEL and United Breweries, that's also very important. Also, earnings for tomorrow, a lot of nifty companies there. We have ITC, NTPC, Cipla and even Adani Power, the bigger names coming in this. Hyundai, recently listed company, that there will be in coverage as well. Pidilite and Canara Bank also, to name a few. So it's an earnings heavy season, but do remember the global cues are also very important. But that's all for now for India Market Close. Thank you very much for tuning in at NDTV Profit. But do stay tuned. We have a very exciting show of Market Express.
NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys are
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. And now let's get straight into the show. But first up, let's see how the markets have fared today. So it was a good day of trade on the Dalal Street, with Nifty managing to close above 2600 and the Sensex reclaiming the 85,000 levels. So benchmarks have ended the day near day's high. Now, speaking of the highs, Nifty Oil and Gas and Energy lead the gains. Metals and FMCG, follow the suit. Auto and Defense, on the other hand, have ended the day in the red. Auto stocks took a breather today ahead of October sales data. A technical pullback and profit booking hit names like M&M, Tata Motors and also Eicher Motors. But analysts say that the fundamentals remain solid, with festive demand likely to steer the sector back on track soon. Next up, we have metal stocks that shimmer for the fourth straight, session. So investors cheer hopes of a positive Trump-Xi Jinping meeting that is to be held tomorrow, and also expect a Fed rate cut that is to happen tonight. So domestic demand stays strong, prices hold firm, and also brokerages remain bullish on ferrous players. So the industry pushes for anti-dumping duties as global rates stay elevated. Copper prices surge as structural supply tightness and rising cost curves grip the market. A key disruption at Indonesia's Grasberg mine adds to the pressure, while demand from the data centers and also electrification continues to climb. The macro backdrop stays supportive, with analysts flagging copper deficits in the years ahead. As the world leans into green energy and also digital infrastructure, copper's role becomes even more critical. Capital market stocks are under pressure in today's trade. Asset managers and also brokerages have slipped after, SEBI proposes a cut in total expense ratio. So this is a move that could actually hit the earnings across the board. Adding to the uncertainty, the street is still digesting SEBI's long-term F&O expiry plan. With regulatory changes looming, investors are treading cautiously around the capital marketplace. Adani Group stocks buzz in trade today. Adani Green Energy jumps on strong Q2 operational efficiency, while Adani Total Gas reports a 16% rise in the volumes year-on-year. Adani Green Total Gas and Energy Solutions rally between 6 to 10%. Adani Enterprises and Adani Ports top the Nifty gainers list. Strong buying and volumes across the board reflect renewed investor interest in the group. The Blue Dart Express is running faster than ever, delivering an earnings report this quarter that blows past the expectations and also sets a new benchmark. Net profit recorded the highest year-on-year growth in the same 3-year period, increasing by nearly 30% to 81.4 crore rupees. After 2 quarters of contraction, the company's margins have resumed the expansion, reaching 16.3%. Now shifting focus to the financial sector. So let's examine the Q2 results from the Mahindra & Mahindra Financial Services. So the company's net profit has seen a substantial growth, rising 45% to land at 564 crore rupees, which is up from 389 crore rupees in the same quarter last year. So the strong profit after tax was supported by stable asset quality and also improving margins. So net interest income, or the NII, has grown 22% to 2,423 crore rupees. Total income also climbed 12.7%, reaching 5,049 crore rupees. M&M Finance has noted that margins were primarily driven by a lower cost of funds and also higher fee income. So despite the strong headline numbers, the company highlighted that credit cost remains elevated due to expected seasonal trends. So overall, the asset quality held steady throughout the quarter. Star Health's latest earnings report is facing scrutiny after the insurer missed key analyst estimates for the second quarter. So while the company has seen healthy premium growth, especially within its key agency business, the bottom line was hit hard by one persistent challenge, that is the provisions. So the company's required reserves for future claims remained stubbornly high, draining profitability and also keeping pressure on the balance sheet. Now, this comes amid an environment of intense competition across the health insurance sector. So, despite these headwinds, there is a silver lining. Star Health successfully held its market share stable against its peers. However, the heavy provisioning meant net profit for the quarter was sharply down. Now on to a story that's got serious fizz then. PepsiCo's top bottler, just unveiled a massive new brew. So they are not just quenching your thirst with soft drinks anymore. VBL is diving ahead first into the alcoholic beverage market. So their exclusive new deal to test the market, Carlsberg beer in key African territories, is the secret sauce everyone's talking about. Now it's a genius move to leverage their chilled out distribution strength and also get a slice of the high margin spirits pie. So that's not all, there's more. To ensure every bottle is perfectly cool, VBL is also getting into the cold chain game. So they have formed a new JV to manufacture their own whiz coolers. Radico Khaitan has delivered a strong second quarter performance with results driven by disciplined cost management and also significant gains in the operational efficiency. So the headline number is the net profit, which has seen a major jump of 73%, closing the quarter at 140 crore rupees. So this profitability milestone was complemented by a sharp double-digit surge in the overall revenue compared to the same period last year. Jewar International Airport may finally take off this December. Government sources tell NDTV Profit that a test flight at Noida International Airport is expected later this week or early next. So the schedule sees a slight delay due to pending work by the Airports Authority of India, which must install key systems before DGCA can actually issue an aerodrome license. So once granted, operations can begin. The airport, a joint venture between Zurich Airport and also YIAPL, has already missed 3 deadlines. Now it's an NDTV Profit exclusive. 2 key subsidiaries of Coal India are officially gearing up for their major D-Street debut. Bharat Coking Coal Limited, or the BCCL, and Central Mine Planning and Design Institute Limited, that is the CMPDIL. So sources are telling NDTV Profit that the market debut for both is likely by December, with the listing process being significantly expedited. Now, crucially, discussions on the critical floor price and also offer price are now in advanced stages. So the government is accelerating its efforts, with both DIPAM and the Ministry of Coal having approved plans to sell up to a 25% equity stake in each subsidiary. So the issue is expected to be a fully offer for sale, though the stake may be offloaded in 2 or 3 tranches rather than all at once. Next up, we have Air India Express, which is gearing up for a major fleet expansion to strengthen its position in India's fast-growing domestic market. The airline plans to induct 20 to 24 new aircrafts in 2026 as part of the broader 470 plane order placed by the Tata Group for Air India and also its subsidiaries. So the expansion will help the low-cost carrier connect more metro and tier 2 cities, improving the connectivity and flight frequency on key routes. So the airline says that the focus will be on domestic growth first before scaling up its international network. Now, a Hyderabad-based IT firm, Blue Cloud Soft Tech Solutions, has signed a 132 crore rupees MOU with US partner Byteclips to design and also develop the cutting-edge edge AI chips for industries such as oil and gas. So phase 1 of the project is expected to wrap up in about 18 months, after which both the companies plan to scale up the solution globally. So with this move, Blue Cloud Softtech is tapping into the rising demand for local AI hardware manufacturing, especially as India pushes to build its semiconductor ecosystem. Next up, we have Uber Technologies, which is also eyeing a bold leap into the driverless mobility. So from 2027 onwards, Uber aims to deploy a fleet of 1 lakh robo-taxis powered by NVIDIA Corporation's autonomous vehicle platform. So the two companies will build on their earlier partnership, in which Uber shared driving data to help NVIDIA refine the AI and also the chips that car makers will use for fully autonomous vehicles. While the rollout starts in 2027, there's no detailed timeline yet for when the 1 lakh vehicle target will be reached. Telecom Regulatory Authority of India and the Department of Telecommunications have agreed to make the display of caller's registered name the default for all the incoming calls in India. So under this proposal, whenever someone calls you, your phone will automatically show the name with which their number is registered unless you choose to disable it. So the service will first roll out for subscribers on 4G and newer networks. Devices sold after about 6 months from the notification will support this feature. So the goal is to curb fraud, reduce unwanted calls, and also give you better transparency about who's calling. Next up, we have Honda Motors, which has identified India as one of its key markets for future growth. Now, along with the United States and also Japan, the automaker said that it sees strong potential in India's expanding automobile market and also the rising consumer demand. So while Honda hasn't announced any new factories yet, it's exploring ways to expand the local production and also capacity to keep up with the growth. The company has added that India will play a central role in its global business strategy, especially as it focuses on electrification and new mobility solutions. Renew Energy Global PLC has pulled off a notable sustainability win. So the company has scored 83 in the S&P Global Corporate Sustainability Assessment, putting it among the top 10% of the energy firms globally. So it's also the first India-based energy company to actually cross the 80-point mark in this benchmark. So for Renew, this underlines its focus on clean operations, strong governance, and also ESG performance as it grows its green energy footprint. Apple has hit a record $4 trillion market valuations, and this was driven by strong demand for its new iPhone lineup. So the surge in sales has boosted investor confidence, sending the tech giant's shares to all-time highs. Apple's latest models and growing services business are fueling the renewed momentum for the world's most valuable company. Speaking of valuations then, it's AI darling Nvidia that managed to scale a record peak just to whisker away from $5 trillion in the market cap. Now, it will become the first company worth $5 trillion after the heavyweight chip maker said that it had $500 billion in bookings for its artificial intelligence processors and that it will build 7 new supercomputers for the US Department of Energy. So, Nvidia stock has closed almost 5% higher, adding over $230 billion in the market value and also bringing its total value to $4.89 trillion after briefly touching $4.94 trillion. Cyclone Montha's impact continue to be felt across the eastern and central India. So in Andhra Pradesh, the death toll has risen to 2 even as the cyclonic storm weakens into a deep depression. So heavy rain and strong winds have lashed parts of West Bengal, Odisha, Telangana, Jharkhand and Madhya Pradesh, disrupting the power and also the road networks. Authorities have urged people to stay indoors as relief and restoration work continues across the affected districts. On to some more national news. President Draupadi Murmu takes to skies in a Rafale jet on a historic flight, becomes the first president to fly in the Indian Air Force's most advanced combat jet. So the sortie, part of Operation Sindoor, showcased India's frontline air power and the president's role as the Supreme Commander of the Armed Forces. The flight was piloted by Wing Commander Shivangi Singh, India's first women Rafale pilot, marking a proud moment for the Indian Air Force. Defence Minister Rajnath Singh will travel to Kuala Lumpur this week to attend the 12th ASEAN Defence Ministers meeting. Plus, so the meeting brings together defence ministers from ASEAN countries and also key dialogue partners, including India, the US, China, Japan and Australia. So during his visit, Defence Minister Rajnath Singh is expected to take part in discussions on regional security, counter-terrorism and also maritime cooperation in the Indo-Pacific. So he will also hold bilateral talks with several ASEAN counterparts to strengthen the defence partnerships and also expand the military collaboration. A new global report has found that people in India experienced nearly 20 heat wave days on average in 2024. Of which about 6.6 days wouldn't have occurred without climate change. So the heat exposure has led to a loss of an estimated 247 billion potential labor hours in India. So the highest recorded tied largely to the agriculture and construction sectors. Experts warn that this trend is a clear sign of how rising temperatures are already affecting the workers' productivity and also the livelihoods in the country. On to some more national news. The Ministry of Road Transport and Highways has issued a Gazette notification on the National Road Safety Board detailing its structure and also the composition. So according to the notification, the board will have a chairman, 1 member secretary from north and also several representatives from across the transport sector. Now, this includes 6 members from state governments or union territories, 2 officers and 2 representatives from NHAI and also 1 member from the National Highways and Infrastructure Development Corporation. So the move aims to strengthen India's institutional framework for road safety and also improve the coordination across agencies. On to some global news now. US President Donald Trump at the press conference in South Korea said a long pending trade deal with India is close to being signed. Trump highlighted his strong ties with Prime Minister Narendra Modi and indicated progress on key sticking points, including US tariffs and also India's Russian oil imports. So reports suggest that both the sides have reached a compromise that could pave the way for greater market access and also tariff reductions, marking a significant milestone in India-US economic relations. Israel has kept up airstrikes in Gaza, killing dozens of people after it said that an attack by Palestinian militants had killed 1 soldier in the latest challenge to an already fragile ceasefire. So US President Donald Trump said that the US-backed ceasefire was not at risk even as Israeli planes struck across the enclave, with Israel and Hamas trading blame for violations of the truce. So these attacks mark most significant flare-up in the violence since peace was brokered through a ceasefire earlier this month. The much anticipated peace talks between Pakistan and the Afghan Taliban in Istanbul have collapsed after a sharp dispute over US drone operations. So the breakdown exposed deep mistrust and also disunity, with mediators from Qatar and Turkey reportedly stunned by Pakistan's conduct. Now, Afghan representatives accuse Islamabad of backtracking on assurances to prevent the US drone missions from its soil, escalating tensions and also raising fears of renewed border clashes. The failures marks a major setback for regional diplomacy and also efforts to stabilize the Afghan-Pakistan region. Hurricane Melissa has slammed into eastern Cuba, unleashing powerful winds and torrential rain across the Caribbean. The storm has left a trail of destruction, flooding towns, uprooting trees, and also damaging power lines and homes in its path. Several island nations, including Haiti, Jamaica, and the Dominican Republic, have reported widespread power outages and also infrastructure losses. Emergency teams are carrying out rescue and also relief operations, while thousands have been evacuated from low-lying coastal areas. Now on to some sports news. It's a blockbuster clash at the Women's World Cup 2025. Australia women take on Indian women in the second semi-final fixed tomorrow. So both the teams are eyeing a spot in the grand finale, with India banking on their in-form top order, while Australia look to extend their dominant record in knockout games. So all eyes on this high-stakes encounter as the cricketing giants battle for a place in the final. Lionel Messi has missed out on the MLS Player of the Year award, with Son Heung-min taking home the top honor. So Tottenham star's standout performances earned him the edge over Messi, who had a strong season with Inter Miami. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Benchmarks and higher as Nifty closes above the 26,000 mark. Sensex gains over 350 points. Broader markets also finish in the green. All sectors barring Nifty Auto gain and trade. Two Coal India subsidiaries, Bharat Coking Coal and Central Mine Planning and Design Institute, are set to debut on the bourses. Sources say the listing process has been expedited and discussions on flow and offer price are in advanced stages. This is an NDTV Profit exclusive. The Finance Ministry kickstarts pre-budget talks with India Inc. FICCI, PHDCCI meet Revenue Secretary Arvind Srivastava, seek easier tax compliance, faster disposal of appeals, rationalize TDS. SEBI proposes revision to mutual fund norms. These aim at excluding statutory levies such as securities and commodity transaction taxes and GST and stamp duty from the TER limits. Wait for Noida International Airport gets longer as it faces completion delays due to pending work. Government sources indicate that the test flight will now fly either later this week or early next week. President Trump says US-India trade deal is imminent, praises PM Modi, says he has great respect for the Prime Minister. President Draupadi Murmu takes to skies in a Rafale jet in a historic flight, becomes the first president to take a sortie in India's Air Force's most advanced combat jet. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour of this show, we'll bring you the latest on markets as well as national and international news. Let's begin with checking how the markets performed today. Stock markets kept their winning streak alive. The Nifty closed in the green comfortably above the key 26,000 level mark, showing steady buyer confidence. Mid and small cap indices also ended higher, spreading the gains across the broader board. Power Grid and NTPC led the charge in the Nifty, while SAIL and M&M Financial boosted mid-caps. All sectors except auto closed in the positive. Let's go across to my colleague Anushi Vakharia now for more details on today's market action. Well, overall, if you just look at the benchmark indices and broader markets, some bit of mirroring of each other's moves is what we are looking at, with about 0.5 to 0.6% of an uptick towards all of these key indices that we are looking. Nifty, if you are talking about it specifically, ended in green above the crucial 26,000 mark is what we are looking at. Nifty mid cap and small cap 250 also ended in green, with here in the Nifty 50 Power Grid and Adani Port emerging as the top Nifty gainers, while mid cap, if we see, gains were led by Financial as well as SAIL. Small cap gains were led by Blue Dart, which reported a strong set of numbers. Along with that, even the graphite-related stocks like HEG and Graphite were in focus. Now, coming to the sectoral picture, Nifty Oil and Gas emerged as the biggest sectoral gainer, with gains mainly led by IOCL and HPCL, while all sectors, if we just consider the move there, they ended in green, barring the Nifty Auto Pack. TVS Motor and Bosch fell the most in the Nifty Auto Pack if you are looking at, while Nifty PSU banks, if you are seeing, they continue to gain for a third session straight in a row. However, Nifty Pharma did break its 4-day losing streak, so that is on a positive that we are looking for the pharma pack. Nifty Metal continues to shine. They have been gaining consecutively for 6 straight sessions, and Nifty Bank, if you are looking at that, 3 days of an up move is what we are seeing. So this is the overall breadth of the market and how the sectors are doing, have done in trade today.
Thanks for wrapping that market action for us, Anushi. Valuations for some companies making a debut in India are absurd. Now, that's the view of Sandeep Tandon. He is the founder and CIO at Quant Mutual Fund. Listen in to what else he had to say about valuations of IPOs and why he thinks there is a case for investors to steer clear of certain offerings.
My worry is that many young people have come who have not seen these cycles, and they are all very, very excited about it. And this is the way human psyche is all about, when you see M2M game coming and everybody is making money, that sort of some amount of hype is getting built in the market. And that's my biggest worry, because these are A, very expensive. B, when whatever reason sometimes the stock starts correcting, there is no exit in these names, absolutely illiquid names. You look at the last 1 year, if I'm not wrong, 60% stocks are trading below the IPO price. So those are the concerns which we have. Yes, short term, everybody is very happy because of illiquidity reason. The float is not there. It's easy to pull up these names. Those are the phenomena which is going in the market. And our worry is there. We generally tend to avoid all these names. As a house, we rarely invest in some of these expensive names. I will straight away compare how these companies are valued in the US market, which is a very mature market. If US is not willing to pay these companies these sorts of absurd valuation, then why should I pay in India? Okay. And look at some of the companies from Korea got listed. They are saying they are not getting that multiple in their own country. It looks like some of these companies will now list in India because India is paying the premium, and hence people will come. There's a joke people talk about, let MNC company make India as a headquarter and subsidiary in Korea or other countries. That's the way people are talking about.
Let's now put the spotlight on Varun Beverages. Now, shares of this company, I'd say, bubbled to fizz up by over 9% in trade today. And the two immediate reasons should explain that description. One, the company has partnered with Carlsberg for revving up its beer business in Africa. And second, the net profit in Q3 rose by 19%. Q3 because the company follows a calendar year structure. Besides this, the company also announced incorporation of wholly owned subsidiary in Kenya. But to get us more details on the action-packed day for Varun Beverages, let's turn to my colleague Jasmeet joining us live from the newsroom.
Well, right, thank you for that. A good day for Varun Beverages, must say. If you look at the company, overall results were muted apart from the net profit, saw an uptick of 19%. While as you rightly said, the one more news comes on the back of the incorporation for wholly owned subsidiaries in Kenya. While this formation is to test the beer market in Africa. While the company also makes a note that they announce a partnership, a strategic partnership with Carlsberg Breweries. While this test will add on to the overall alcohol beverage, and the main objective of this MOU is to test the beer market, while it also forms the JV. While now this addition of particular beer business into the overall new business is something to watch out for, and given the reason why the stock was buzzing in trade today. Now, if you look at the overall revenue, the revenue is up 2% at 4,897 crore, while the margins have remained muted compared to last quarter at 23.4% was 24 in the previous quarter of the same year. Now, in terms of net profit, it sees an uptick of 19% and currently at 741 crore for this particular quarter.
Thank you so much for taking us through those details behind why the stock really shot up on the bourses today. But moving on, the company behind the most commonly used ready-to-eat mixes made its formal entry into the market via the IPO route today. I'm talking about MTR parent Olectra India's IPO that opened today and has been subscribed over 60% so far as we speak. While qualified institutional buyers participated the least, the public offer has seen significant traction from employees reserved at 2.94 times subscription, followed by non-institutional investors at 1.14 times and retail investors at 0.8 times. Remember, these figures are as of 3:30 p.m. The IPO closes on day one at 5 p.m. and we'll update those numbers as they come in. But the issue closes on Halloween's on October 31st. And another day, another mega potential IPO knocks the SEBI door. Both's parent company, Imagine Marketing, has filed its updated DRHP with the market regulator. Now, the IPO would be worth 1,500 crore rupees and will be a mix of both fresh issue and OFS. For more details on the IPO, let's go across to my colleague Agnidev Bhattacharya.
Right, so big news coming in for Imagine Marketing, the parent company of headphone maker Boat. Now, the company had earlier filed a confidential DRHP and has now filed an updated DRHP, which is a public document. So importantly, the IPO plans of Boat are finally public. Now, remember, the IPO is likely to be a 1,500 crore rupees IPO with 500 crore worth of fresh issue and an offer for sale of around 1,000 crore rupees. Now, the fresh issue, let me come to that first. The fresh issue will be used for brand marketing and general corporate purposes and for funding working capital, but the offer for sale is the more interesting part, worth 1,000 crore. Remember, this offer for sale will be seeing participation from co-founder Aman Gupta as well as executive director, and will also see participation from Qualcomm, Warburg Pincus, and even Fireside Ventures. Now, this is the updated DRHP. The company now will wait for SEBI approval, and after that will file an RHP depending on where that goes. So this is a developing story. Do stay tuned as we bring you more updates.
Thanks for that, Agni. And it's time for an NDTV Profit exclusive. Two key subsidiaries of Coal India, which are Bharat Coking Coal and Central Mine Planning and Design Institute, are getting up for their D-Street debut, likely by the month of December. Sources tell NDTV Profit that discussions on pricing are in advanced stages. My colleague Shree Chaudhary, she's the Delhi Bureau Chief for NDTV Profit, joins us with exclusive details on the same story.
Yeah, that's right. What we are picking up that the government is accelerating plans to bring two of the Coal India Limited key subsidiary Bharat Coking Coal and CMPDIL to the stock markets, with both expected to make their Dalal Street debut by December. Now, according to sources, the listing process has been expedited with consultation over floor price and offer for price, etc. now at advanced stages. Both IPOs are expected to be fully offer for sale, through which Coal India is expected to offload part of its stake as part of their disinvestment and value unlocking strategy. Now, if you remember, DIPAM, which handles government privatization and disinvestment plan, had already given note to Coal India to sell up to 25% equity in each subsidiary. However, the entire stake may not be offered in the single tranche. The sense we are getting that the sale will be carried out in 2 to 3 phases, depending on the market condition and investor appetite. And in fact, Bharat Coking essentially engaged in the mining and supply of coking coal, which are crucial input for steel and power sector. CMPDIL, which is Coal India Consultancy Exploration Arm, both have filed the DRHP with SEBI somewhere in May and June. Now, both listing expected to, of course, broaden investor participation in coal sector, unlock value for Coal India diversified portfolio. But more importantly, as things stand, if this two IPO, come in the given timeline, could be a major milestone in the government overall PSU disinvestment drive, especially when the government is getting sense and already stepped up plan to offload stake in a handful of PSU as global uncertainty eases, market sentiments improve, particularly amid a more stable outlook on the tariff, and that's what sense we are getting, and very crucial for the remaining part of the current financial year.
Thanks for that, Shrimi. And moving on, markets regulator SEBI has proposed a comprehensive overhaul of the country's mutual fund fee structure. These changes are made as part of its effort to simplify rules, improve transparency, and as well as reduce costs for unit holders, basically investors like you and me. My colleague Hiral now joins us with more details on the same story.
Let's quickly understand, what are they saying? They've plans the SEBI plans big changes in the mutual fund fee industry, which means that mutual fund investors probably will get cheaper. All this is at proposal stage. They want to cut the overall charges and make costs clearer for investments. Apart from that, this aims to make investing cheaper and more transparent as well. And in addition, they've proposed lowering fees by almost up to 0.15% for open-ended and 0.25% for close-ended schemes. This is a change from SEBI's 2023 rules that bundled all costs together, and this would include charges within the overall expense ratio as well. If you talk about the current AUM slab, it ranged between 1.05 to almost 2.25%, and this is basis the AUM of 0 to 500 odd crores to going up to more than 50,000 odd crores. Now, what changes from here on and what is the proposal is what we need to look at. If you can go to the next slide, that tells you that they are proposing lowering the total expense ratio, which is the TER, by up to 0.15% to on open-ended mutual funds and by up to 0.25% on close-ended schemes as well. Now, what is the impact? This will impact investors where they will see higher net returns. And if you talk about the lower expense ratio, that actually will come down to a higher net asset value, which will in turn become a higher investment as well for the investors. Now, how is the impact on asset management companies looked at? Firstly, this would actually pressurize the revenues of the companies. It would squeeze the profitability as well of all these fund houses. They will have to focus on efficiency and scale from here on if they want higher fees, because you're talking of a voluntary performance linked fees as well. So the moment the performance is good, the fees probably can go higher, but again, there is a cap to that. Moving on, if you talk about the brokerage cost for cash, the current is around 12 basis points. They're expecting it in the proposal, they proposed a 2 basis points brokerage cost there, and for derivatives from a 5 basis points, they've proposed a 1 basis points. The impact will be that it will prevent investors from paying twice for research, increasing transparency as well. Secondly, the additional 5 basis points, if you look at it, currently they're allowed across schemes as a transitionary measure, but the proposal is to remove it completely. The impact is that it actually removes a cost that was meant to be a temporary cost, and it is pretty much transitionary in nature as well. Now, when you talk about the base expense ratio slabs, the current is a fixed fee limit where they've proposed to raise the fee limit by 5 basis points for the open-ended schemes, and this will actually help AMCs to cushion the impact of removing that additional 5 basis points charge. So this is a mitigating factor for the AMCs as well that SEBI has been proposing. The statutory levies, if you talk about them, the current one is that most taxes are included in the mutual fund fees, but the proposal is to show these taxes separately, so there will be transparency from here on, and all future charges in government taxes will be passed directly to the investors. So that is what we are looking at overall in terms of where mutual funds go. The key over here is that will mutual funds actually become cheaper or not? This is the existing approximate TER ratio of HDFC AMC, Birla AMC, UTI, Nippon, SBI Small Cap Fund. This is what we're looking at in that range of 1.5 to 1.6%. But yes, if this comes into practice, probably your funds will become cheaper, your returns will be higher. So that's what we are watching out for so far.
And explaining this development further, Ashish Somaiya of White Oak Capital said that earlier, fund houses stopped charging exit loads, which led to a commercial loss for asset management companies. To offset that, the total expense ratio, or also referred to as TER, was initially increased by 20 basis points, but later reduced to 5 basis points. And now this metric is undergoing another revision. So the question to ponder upon is, how will this translate into lower costs for unit holders? Listen in from a conversation earlier today.
In the past, what was happening was that if you redeemed from a mutual fund, there used to be an exit load. Now, in 2012, that exit load was, said that, okay, AMCs cannot charge any exit load. Whatever exit load, if any, has to be credited back to the NAV of the scheme. So obviously, AMCs had some commercial loss because of that. So in lieu of that removal of exit load, the TER was increased by 20 basis points. Then after some time, that 20 basis points was made 5 basis points. And in the latest proposal, that 5 basis points has been completely kind of done away with. So not only the base TER related matter which you described, which seems to be on an average depending on the slab, somewhere 15 bips, somewhere 10 bips. But apart from change in base TER, even that 5 basis points of exit load related expense, that also will go down.
The rift in the Tata trusts has widened. Venu Srinivasan, Noel Tata and Vijay Singh are said to have rejected Mehli Mistri's renewal for life trusteeship. Sources told NDTV Profit that Mistry is likely to explore legal options too. Notably, he had approved Venu Srinivasan's trusteeship renewal on condition of the renewal of other trustees. My colleague Nisha Podar, she is the editor for corporates at NDTV Profit, now joins us for more details on this. Nisha, what are you picking up?
That's right. It's an all-out war between the two factions of Tata Trusts, the entities of which, remember, are the largest and the controlling majority shareholders of Tata Sons, India's one of the largest conglomerates. Now, the big question here is that with Mehli Mistri's ouster that we have seen, who was not given the renewal by 3 of the members, namely Noel Tata, Venu Srinivasan and Vijay Singh, all 3 are nominees on the boards of Tata Sons, and they have not approved the renewal of Mehli Mistry on the board of Tata Trust. With his ouster, there are a few questions on how this particular rift and friction is going to move forward. First, of course, we gather from sources with direct knowledge that Mehli Mistry could be exploring legal options on challenging the non-renewal, and that is on account of the resolution that was passed by this particular trust board on October 2024, and in that resolution they said that all of them would be the permanent members and will get life trusteeship at their renewal. Now, whether or not that particular resolution assures a permanent position is the biggest legal point that could be debated if Mehli Mistry takes it to the court. Second, the government had already interfered in this non-profit philanthropic trusts activities and the friction that was brewing inside. Will government intervene? Or else whether the charity commissioner, if he gets any grievance, really comes in and takes action on the friction between the two factions of Tata Trust, one with the nominees on the board of Tata Sons and the others who are non-nominees on the board of Tata Sons but are part of the trust board. So what really lies ahead needs to be seen, but definitely no truce in sight, and this particular war is at a breaking point.
Right, Nisha, thank you so much for explaining that. But for more on this story, viewers, don't forget to tune into The Big Question at 6 and 9 p.m. to find out what the ousting of Mehli Mistry could mean for the Tata Trust fight. Remember, Big Question at 6 and 9 p.m. only on NDTV Profit. And it's time for an NDTV Profit exclusive again. We understand from sources that Noida's Jewar International Airport is now expected to start operations in the month of December. Now, this delay is said to be caused because of the pending work by the Airports Authority of India.
That's correct. Government sources have exclusively told NDTV Profit that the Jewar Airport or the Noida International Airport, which was supposed to start operations earlier this year, it is most likely to start test flights either later this week or maybe next week. Sources have told NDTV Profit that due to certain equipment not being installed by the AAI at the Noida International Airport, there has been a delay of test flights, and either the test flight will be conducted this week or maybe it will be conducted next week. And once a successful test flight is done, then only an airport can get an aerodrome license. So after this procedure gets over, after Noida International Airport conducts a test flight by the AAI, then we can expect certain kind of positivity for the entire aviation landscape in the northern part of the country. And moreover, the delay is because of certain supply chain issues, and the Noida International Airport had missed 3 deadlines. Earlier it was supposed to start ops in 2024, and later on on, it was expected that the operations will begin at the airport in April 2025, and then there was another date that was given, that was May 2025, and right now we are in October, almost into November. So if the test flight is conducted this week or maybe next week, then we can expect the DGCA to quickly grant an aerodrome license, and as per sources, the Noida International Airport might get inaugurated sometime in November, and the full ops will only begin by December.
Akasa Air faced an imbalance in its pilot-to-aircraft ratio earlier, but the company is now confident of turning things around. The CEO has affirmed that by the end of this year, 100% of its pilots will begin accumulating flying hours, and the airline will soon start rehiring pilots to strengthen operations. He also added that Akasa pilots are pleased with the company's approach. Listen in.
But the exciting part is with the fact that Boeing has increased its rate production from 38 to 42, and our growth is that much more secure. We don't find any impediments whatsoever when it comes to Akasa's future growth. The fact that our training pipeline has been cleared, and most pilots, 100% of them by the end of the year, as we said, and by the way, there are only 60 odd days left for the end of the year, should start accumulating flying hours. So when you couple those together, I think it's not just exciting times for all our pilots, but I think you'll find that we'll be in a position to start rehiring pilots as well. So very, very excited about what the future holds for all our pilots. And by the way, we continue to get great feedback from our pilots. They're pleased with the approach that the company has taken, the employee-centric approach that we've taken, the kind of lifestyle patterns that they get to fly, the fact that they're treated with dignity and respect, our approach to safety, our approach, in terms of pilot happiness. I think so. Overall, I'd say we're in an excellent position, not just now, but for some time.
And continuing with giving you updates from the aviation sector, Indigo is expecting 200 million customers yearly by the end of this decade, says CEO Peter Elbers. While speaking at the Aviation India 2025 program, he added that Indigo is expanding its scale and is living up to the capacity guidance quarter by quarter. Listen in.
What we are doing is in fact expanding on two axes. One is scale. We're going to double by the end of the decade, which means our 118 million customers would move to 200 million by the end of the decade. That's a number which will bring us to the likes of the huge American operators. And there's no reason why India, with this population and this economy, should not have airlines of the same size. So one is doubling in size, and that will still have a significant domestic growth and development, more in frequencies than in destinations. And secondly is all the new stuff we're doing in internationalization, cargo, loyalty, and MRO is our next big frontier to start developing.
President Trump has once again indicated that US and India will soon sign a trade deal. While speaking in South Korea today at the APEC CEO Summit, highlighted his strong ties with Prime Minister Narendra Modi and hinted at progress on key sticking points, including US tariffs and India's Russian oil imports. Listen in.
And for any company that does not wish to pay the tariff, I say, you could build your factory in America. If you build your factory in America, there is zero tariffs. But, again, going back to the wars, it's so important. If you look at India and Pakistan, so I'm doing a trade deal with India, and I have great respect and love. As you know, for Prime Minister Modi, we have a great relationship. Prime Minister Modi is the nicest looking guy. He says, and he looks like you'd like to have your father. Like, he's a killer. He's tough as hell.
And on that note, it's the end of this edition of Profit 360, but do stay tuned to the channel as we continue to give you a lot more news and updates.
the NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years. All the
Hello and welcome to KYC. You're watching NDTV Profit and I am Sharad Dubey. And today's company, which would be on our radar, that would be a software company. It's called Newgen Software. Recently, the company came out with its results also. But what the question remains is, why are we actually interested in this company? What I actually want to know. What are the questions, which we have gathered from the investors and our viewers? We are putting them across the management. First question is, what is the outlook for the deal closures, especially in the emerging market industries? That will be something which you'll be watching out for. The second question, of course, will be whether it's the tense fight between the local or the global competition, how it is shaping up, and what would be the company's strategy going ahead. Also, interestingly, the third question where the market is interested is, what is the margin outlook planned for FY26? Already half of this time is completed, and how do one sees AI helping with the internal productivity? And of course, when AI kicks in, margin benefits also kick in. That's what most of the IT players have stated. Last question is, any acquisitions are planned in the AI space? That's very interesting, as most of the IT companies in the large service-based companies, they are announcing some JVs and tie-ups, but no major AI investment yet. So we'll be also looking at this entire gamut. But the question remains is, what are the total factors going ahead for this company? But before that, I would like to just point out what are the details about this company, what it's all about. So it was founded in 1992. The company was a public company focusing on process automation and content management. To simplify it for our viewers, this is not service-based IT company, this is product-based company. That will actually simplify it. It's New Delhi based, but the global process that has actually picked up. It's present in 77 countries, having roughly 500 odd customers. And interestingly, the company develops software for digital transformation and automation. Of course, in some IT viewers will know this is agile method as well. BPM, ECM, these are the segments. That means they develop enterprise solutions as well. And to simplify it, they have a good scale as well. FY25, the revenue stood at roughly 1500 odd crore rupees. So we can say that this is a proper mid-cap IT company. Tech advantage, low code, no code platforms. These are the buzzwords. And of course, now let's add the third buzzword, that's the AI as well. The primary product is about integration, and this is largely used by enterprises. So that is what we are actually looking at. But there are other products also which are very interesting. To name a few, they offer workflow automation, document management, customer communication, and interestingly BFSI, government health sector. These are the three sectors where the majority of the clients are there. Revenue models, if we have a look, we are having software sales, services and supports, and the revenue mix, it is a total mix over here. Just see, it's not concentrated on any segment, and that is actually a positive thing for the company as well. Geographically, we see there has been a lesser dependence coming in. Of course, in the you could say in the US markets, that's only just 24%. So that is also a hedge in today's times as well. But let's go back to our show's format. That is the rating parameters. We are having 8 parameters and we'll be judging them on that. Let's just go through the parameters once before we start the show. Income statement, balance sheet, cash flow, return ratios. These are all numbers, but apart from that, non-numbers, shareholding, street kid, valuation, and lastly street coverage. That is also something which we'll be watching out for. But let's start with the first parameter today, and that is the income statement. And of course we'll be adding the numbers as well, the Q2 numbers. Q2 numbers of course came in, we could say, a last previous trading session, and stock saw a significant up move as well. But income statement overall, the revenue that stands in at a 24% 3-year CAGR. We have taken the financial years FY23, FY24 and 25 to derive at this number. EBIT the growth also has been roughly at 25%. Now the number which is coming on the screen is the margins numbers, 21% growth, 23%. So there is an uptick coming in the margins as well. Let's just deep dive into this margin trajectory, and that has been a symbol of strength in current market scenario, and that is something which will of course pick the brains of the management also, that despite so much uncertainty happening in terms of deals, they have been able to increase their margins, not very significantly, but still tick by tick it's on the upside as well. And the main question is, how were the Q2 numbers? And the numbers were bumper. You could say that one side from the mid-cap IT space, Newgen Software is coming out with good numbers, but the large big tech IT companies, still some or the other overhang is still there. But let's look at the numbers. EBIT has seen a significant jump, almost 162% up on a sequential basis. Revenue also seeing a 25% odd growth. And I had spoken to you earlier that the company has a geographical diversification, and just 27% of revenue just comes from US market, and that is why you are seeing the benefits of diversification for this IT/product company. Now net profit also saw a significant jump, that's roughly 64% up, and in a muted scenario still the company has outperformed in the IT space, especially in the beginning of this earnings season when you compare them in the mid cap and the small cap IT and product companies. So their peer levels will be also different. Net, the income statement from my side is going to be a thumbs up. I would give a +1 rating for the income statement parameter. Balance sheet, also largely a clean balance sheet to look at, and generally when we look at these IT companies, we should always look at their cash levels also. The question remains for the investors is whether this cash will go as a buyback, whether this will be used for growth or acquisition. That is something the street will be watching out for. And company had mentioned about AI acquisitions as well. So of course they're sitting on a good pile of 416 crores of cash. So whether this will be a buyback or an AI investment, that is something which the street really wants to know. But net, if looking at the numbers, they are decent, and that is why I have given a +1 to this as well. So the company is ticking the right boxes, income statement as well as balance sheet, but cash flow there seems to be a neutral move. Of course, the cash flow to PAT conversion, that has actually come down, but the operating cash flow, that has been growing significantly. That's on the positive side. PAT is also doing well, but some net cash flows adjustments have also taken place. And when you look at operating cash flows, you should also look at the other cash flows as well, which includes financing and other cash flows, and these impact is coming in the negative side. That net cash flow income you can see on the screen, that's down 21 odd crore rupees. So because of these adjustments, I would give a neutral rating when it comes to the cash flow parameter. So we have spoken about 3 parameters till now. It's going on the positive side for the company, but let's see whether this can hold or not. But return ratio, that is where some questions are arising. Let's just pull up the return ratios chart, and they have been there, they have grown, but it's like a kind of stagnation, and you could say that it's in a very thin band. Whether this business actually maintains this, or there is a upside or a downside, that we'll ask the management. But the ROC numbers, not much to discuss. They are still flattish not a major growth coming in. So that is area where of concern comes in for me. And for return on equity, that also you look at it, that's stable at 23%. No major changes happened. Because of that, I would be giving this a thumbs down when it comes to the return ratio for Newgen Software. But let's move on to the shareholding segment. That's also pretty interesting. And we have compared the shareholding patterns over the last 3 years, and you've seen the promoters have stood by. Not much sell has happened. Of course, in March 24, the stake was 55%. Then after that, a small stake sale has been there. Promoters have held the majority stake in the company. Now let's go deeper into it. The FI segment. FI segment, that out here we have seen some kind of volatility in the counters. It was around 16%. Then there was a big massive jump in March, but then there was some profit booking, some selling which has happened, and roughly you could say 18% is the current stake. DIs, they have been lapping up. That's pretty interesting. Just compare that with March 25 with September 25. So we could say, or we can deduce that smart money has come in ahead of the strong performances which we saw in the second quarter of this fiscal as well. Public, that has actually gone up as well, as the retail interest has also been made in the stock, and that's a kind of a anomaly because the IT space has been hated a lot. The Nifty IT index has cracked more than 15% this year. But if you go deep inside, you look at the product companies, there are some good performances happening. Diversifications are there, and company has held its ground. That's why the retail interest has been maintained. That's roughly, you could say, almost, it's jumping from 16 to 18%. But of course, I would definitely give a thumbs down to this. And of course, this reason for that is coming in is that there hasn't been a significant increase in the DI participation. So it should have been on a higher side. Then we could have concluded a neutral or a positive rating. But for now, it's a down thumbs up for the shareholding patterns. The sixth parameter, which I'll be judging the company on, that's the street cred. The initial up move which you are seeing 1 month share performance, this has largely been aided by last 2 days rally after the numbers have come in. So that is why that's coming almost 13%. But if you're a long-term investor in the stock, it has tested the patience of the investors. 6 months, 3.5% odd return. And looking at the year to date, that's a significant downtick coming in. So if you are a long-term shareholder in the stock, your patience is getting tested. And maybe we could say that overall, this year itself, nothing has much happened for the stock. But 5 years, if you're holding it, it has been a significant multi-bagger. 663% odd returns have come in. So net, long-term investors, they have made money. Maybe positional investors, or you could say 8 month to 12 month holding investors, they have lost money. So I would like to give a neutral rating. But overall, the technical charts, the earnings, what they're suggesting, this might suggest an up move going ahead. So that's a very interesting portion to look at. Up next is the valuation segment. That's one of the interesting portions of this company, and because of these corrections, the valuations have become attractive. EPS numbers, they have actually gone up. That's around 24 in FY26 expectations, and you're going to touch the 30 mark in FY27. The P ratio, we have taken the competitors' average also. It's, we could say, roughly fairly priced, but it is for 41 times for FY26 and only 34 times coming in for the next 12 months after that fiscal year. That net it means is that the valuations are decent, fairly priced in, but there is a scope for growth here as well. Of course, the large cap IT companies, if you have a valuation check, they range between 20 to 25. The smaller ones, they range between 30 to 40. So it's bang on towards the lower end of the fairly valued IT product companies in the mid cap or the small cap companies. So net valuations, I would be giving this company a thumbs up. And street coverage at last, you see there's only 8 analysts are actually tracking the stock. Average upside potential still, it's 19% over here. But hold and sell, that is having the majority of them. That is why I'll give a down thumbs up. So let's revise all the entire rating parameters which we have got, and one by one we'll give in the overall numbers. Income statement, balance sheet, they have done positively well. I've given 1+1. This is a neutral here, cash flow, and return ratios still not much happening, so a thumbs down coming in. Shareholding, not much to share. Street cred, 1 year return shareholders, they haven't got much Valuations still attractive in the current levels according to their peers. And lastly, street coverage, not much coverage, but not much bullishness either. And they're expecting a 19% upside potential. Even Stevens, 4 to 8. We are getting these numbers. Newgen Software, the final rating for KYC comes in at 4 out of 8. But let's move on. Let's pick the brains of our guest. Good afternoon, Virender. He's the CEO at Newgen Software. A very interesting set of Q2 numbers had actually come in. And of course, my first question, of course, would be that what led to this growth in the Q2 numbers, and will this growth actually sustain going ahead?
Good morning, Sharad. How are you doing? And thank you for having me on your call. I think, when we look at these Q2 numbers, I think we are looking at in the context of probably Q1. And I think Q1 number was an anomaly in our system. Generally, we have a history of growing at a consistently a better rate. And because of a lot of uncertainties and various conditions, I think Q1 was muted. Q2, we have come back to the normal growth trajectory. No, I would not still call it fully because some markets have fired while some markets have not. I think markets outside India and Middle East, which are our stronger markets, have fired, which has got us to around 11% of overall growth. But I'm thinking, as our traditional markets, which is India, Middle East, also start joining this growth momentum, we should be in future able to do better. So this is predominantly on account of deal momentum. We are a software product license-based businesses. Typically, it's a very sales and marketing driven businesses. And we have to make new deals. A lot of our business comes from new license sales in that quarter, as well as new logo acquisitions. And that has helped us to grow in this Q2. And I think, we can continue that growth momentum going forward.
Mr. Jeet, one more question regarding the deal closures outlook in the emerging markets. Of course, Q2 numbers were on the stronger side as well from these emerging markets, and they also contribute a decent amount of revenues as well. How's the outlook looking like for deal closures? And I want to know about the large size deal closures. Are they happening, or are there delays are still there, as what the industry folks had spoken to me about?
Yeah, so our large size is quite different than their large size, but I think the problem remains the same. We have seen generally in the markets when the deals are slightly larger size, the decision-making processes have been a bit slowed down. For the first half of the year, we still have faced that as a problem. I think even in Q2, some of the funnel deals which were of larger size did not make through in terms of they are getting deferred or delayed or staggered to different quarters. So in my own take, I think that over Q3, Q4, the situation should become better. I think both in US and mature markets as well as in India, I think the banking and credit offtakes are for revival. We have a lot of our sales coming in areas which we support digital lending platforms, both in NBFCs and banks. And with the credit revival, I think there is going to be renewed interest in getting and automating those solutions. Last 2 years, 3 years, we had a wave of automating the public sector banks. I think now the private banks are joining in terms of modernizing their systems based on digital stack. I think both in US as well as in India, I think the banking revival can happen downstream. But I think we'll have to wait and watch because there are a lot of uncertainties happening across every day in terms of what's happening on trade, regulations, also in terms of spend and uncertainties, which also in a market like India, which AI creates in terms of because we are typically end consumers of AI rather than really being at the forefront of the technology.
Well, we'll hold that thought on the AI front, but I have another query as well. And I've been checking a lot of PSU banks, their advertising, their investor presentations, and the significant budget is being earmarked for digital stacks or AI or the modernization. And they're actually picking up more faster and they're absorbing than the large private banks as well. That's what I've been hearing from the industry. So this benefits you a lot because roughly I'm seeing 68% of your revenue comes from the banking and the financial services part. So is there any new specific product you guys are working on, or there is some new offerings coming, especially for the Indian BFSI clients, and what would be your pitch for that?
See, I think the maturity of the digital stacks in Indian banks is already quite advanced compared to even when we are looking at global peers. But what is also the India is a big growth market, and the innovations is happening at different layers, whether it's coming from digital stacks which the government is providing or the overall the technology emerging. So every 3 years, the stacks do get transformed. So the opportunity in India is very large. See, we have been on the forefront of typically using the India stack, as well as looking at the DLP programs and modernizing the whole DLP programs end to end in public sector. And we did a lot of those. We are also working on the trade side and trade automation. That's another area. There is also an area of, payments which we're working on. So a lot of products on the line which can solve and help our customers, to solve their next generation problems. So the stack out there is quite relevant. Beyond that, there is a renewed, because of the interest in AI and what the Gen AI has led, there's a renewed use cases around service request management, compliances, records management, governance, where we are very strong globally in terms of we have one of the world's best recognized products in those stacks. So I think that should give us momentum over some time. But I think we'll have to wait and watch where the overall situation, how it unfolds.
That's pretty interesting. And I saw the cash balance also of yours. If you could fire the cash balance, that has been on the higher side. As an investor or as a public, our investors who are watching our show, KYC, they tend to ask, will there be a kind of a shareholder return, a buyback in the offing, or are you looking at some investments in R&D or AI? So the street is very confused now. If IT companies having cash on their balance sheet, two school of thoughts have come up. So which school of thought do you support?
So I think one of the things is, one of our challenges right from the way we got listed is understanding our company, because there are very few product players out of India which are going and selling globally. So product companies generally are very investment led companies. And for us, I think the whole objective of running is the business has a lot of margins and there is an opportunity to really get those returns. But our interest is to invest in growth. Now, for investing in growth, we have been lucky to generate a lot of profits over last multiple years, and the cash has got accumulated. And we have given the guidance that the whole purpose of that cash is to make sure that we are able to aggressively invest for the growth. We are looking both organic ways of expanding markets where the cash can be deployed, as well as inorganic ways in new areas of technology, which could be around AI or also other than AI. There are many areas which are aligned to our products. We are interested in that. So far, I think this is the direction which the board has provided us to look at the money and invest in growth. And if there's any other change, then we'll come back and, inform everybody about it.
And Virendra sir, AI is the buzzword. Some years ago, SaaS was also there, Web3 had come in. But net for a global consumer, what is the competition like? Currently in India, you have a good stronghold in the BFSI space that's largely known in the markets. But globally, how do you position yourself that you are offering AI related products, and how unique your product is as compared to the global products?
Yeah, so I think for product companies, we have to be slightly ahead of the curve. Our investments in AI started around 3 years back. So, I would not be able to sell my product globally if I was not at the top edge or the cutting edge of technology or what curve. Our investments in AI started around 3 years back. So, I would not be able to sell my product globally if I was not at the top edge or the cutting edge of technology or what the AI is supposed to deliver in my product space. So I think we have done that hard work, and I think the work and invest will keep on happening over us because the area is evolving very fast. We also were leaders in getting the Gen AI integrated in our product stacks, both in, I think Marvin was the first release, then we had other products which were released last 2 years. We were also got early wins across different geos of AI use cases. So I'm very comfortable in terms of what we have done in the products. Having said that, the opportunity of future is very, very large. It would need more investments, both in people, talent, and building technology. Today, when my products are compete and benchmark against the world, we are not, shying away from, competing with the best and, winning those use cases. And that's what we are doing. If you're looking at what we service is the top enterprises in the world, they only buy the best products. They don't make compromises on those. So, and if you look at my deal velocity, even in last 2 quarters, we have had significantly beyond existing accounts, we had deal wins in new logos, where everybody is a level playing field and I am competing against the global competition. So we are, pretty happy about progress, what we have done but also we are conscious about the opportunity which the AI will unfold over, next few years and how to really invest for that. That's our plan.
Well, that's pretty interesting for AI investments. And when we speak about growth capital, you will be actually doing from internal accruals. That's what you had earlier stated. But current margins, not much move has happened. It's currently at 23% odd. Okay, it's in a good range, it's a positive side, but not bigger move. What's the margin outlook for FY26 going ahead? Will we see, because of expansions, the margins might be suppressed, or are there any products which are value added which might actually bump up the margins going ahead? And maybe even you are an AI company, you will be using AI to yourself also, so maybe an incremental benefit to the margins comes. So the street wants to know what's the margin outlook for FY26.
I think last 4 or 5 years, with whatever growth perspective, we have said that we have an aspiration of maintaining the net margins around 20%. At rest, everything has to be aggressively pushed back into R&D and growth and expansion. The opportunity size for our kind of a company or typically play in the product is very, very wide. It's our own ability to execute and invest rightly to make sure that we are able to capture. If you understand our business a bit deeply, you see that almost 60-65% of my revenue comes from the heads which have no direct costs associated with that. So any expansion of license, annual technical support or subscription, or the cloud or SaaS businesses, they don't have direct costs associated with that. So we have organically, with even mid-teen growth, we always expand margins. But then again, for us, the whole idea is to invest back that into either in R&D or in sales and marketing to make sure that we are safe. So I think our first priority is growth, and the second is margin. Having said that, we think that as the business grows, it is very organic, the margins will keep on expanding.
Well, yes. So the first priority is growth, second is margins, and AI will be wrapping this everything all around, as the entire conversation also was nearly AI as well. Thank you very much, Virender sir, for joining us and speaking about your company in our special show KYC. But that's all, folks, today. And thanks for tuning in for KYC only on NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Important update overnight from the Securities and Exchange Board of India, that's the market regulator, that relates to the charges that mutual funds levy to manage your money. This is described with a percentage. It's called the total expense ratio, and it is a percentage of the net asset value. Now, basically, all of the charges that are levied by the mutual fund to you are described in this one ratio. So if it is, for example, 1%, this is deducted from your NAV on an ongoing basis, and what you see on your screens when you pull out your applications is the implication after the removal of that total expense ratio. How it is currently charged is important for you to understand, and some of you probably already know this, but before I get in my guest, it's important for everybody to be on the same page. How it is charged right now is a slab-based structure. So if you think of any actively managed equity mutual fund scheme that is just launched, it will start at, if it is between 0 to 500 crore in assets under management, 2.25%. And as the assets under management go up, the TER that is chargeable, the maximum TER that is chargeable, reduces per slab, and it moves beyond so if it goes beyond 50,000 crore rupees and there is a slab based system, it goes to 1.05%, and it decreases every 5,000 crore after that by as much as 5 basis points. So that is what it stands at right now, but that could be changing. To talk about all of the changes that are being proposed, I'm joined by Ashish Somaya, who's the Chief Executive Officer of White Oak Capital Mutual Fund. Ashish, I have perhaps struggled more than you would have in describing that total expense ratio structure, which is why I have you to talk to my viewers about it. So let's start with some of the changes that are coming through, and I see about 5 heads, but the headline seems to be that base TER itself is supposed to be heading lower by as much as 15 basis points for your open-ended schemes and 25 basis points for your close-ended schemes. Is that correct?
Yeah. Yes, and little bit more also, Alex, because there is that another 5 basis points which was put up as saying that in the past what was happening was that if you redeemed from a mutual fund, there used to be an exit load. Now in 2012, that exit load was said that AMCs cannot charge any exit load. Whatever exit load, if any, has to be credited back to the NAV of the scheme. So obviously AMCs had some commercial loss because of that. So in lieu of that removal of exit load, the TER was increased by 20 basis points. Then after some time, that 20 basis points was made 5 basis points. And in the latest proposal, that 5 basis points has been completely kind of done away with. So not only the base TER related matter which you described, which seems to be on an average, depending on the slab, somewhere 15 bips, somewhere 10 bips. But apart from change in base TER, even that 5 basis points of exit load related expense, that also will go down. So net for investors, I think there will be a reduction in TER.
Okay, so but that 5 basis points that you said for the exit load, not everybody was charging it. Is that correct?
No, by and large, most equity funds had some or the other exit load. And in lieu of that, there was a practice of charging 5 basis points. I think it would be quite common. I mean, I don't think that it is a rare phenomena. So that you should count that, it will be resulting in a 5 basis points reduction there also.
Okay. Where is this 15 basis points reduction in total expense ratio and 10 basis points, as the case may be, coming from? Because there are a couple of changes that are being proposed. One is that your statutory levies, which is your STT, which is your GST, which is your stamp duty, all of that cannot be included in the total expense ratio. And so therefore it has to be passed through to the consumer. Ultimately, the consumer will be paying it, or the investor will be paying it. It's just that it's not included in the TER. Is that the right interpretation?
Yes, but so I'll tell you a couple of things. As of now, what I understand is that the reduction, if the proposal goes through as is, because we should not.
शिपिंग और दूसरी इंडस्ट्री से जुड़े लीडर्स, अन्य महानुभाव, देवी और सज्जनों, साथियों, मैं आप सभी का ग्लोबल मैरीटाइम लीडर्स कॉन्क्लेव में अभिनंदन करता हूं। साल 2016 में मुंबई में ही इस आयोजन की शुरुआत हुई थी और ये हम सभी के लिए खुशी की बात है कि आज ये समिट एक ग्लोबल इवेंट बन गई है। आज यहां इस कार्यक्रम में दुनिया के 85 से अधिक देशों की भागीदारी ये अपने आप में एक बहुत बड़ा मैसेज दे रही है। शिपिंग जायंट्स, उसके सीईओ से लेकर स्टार्टअप्स तक और पॉलिसी मेकर से लेकर इन्वेस्टर्स तक इस समय सभी यहां मौजूद हैं। स्मॉल आइलैंड नेशंस के प्रतिनिधि भी यहां उपस्थित हैं। आप सभी के विजन से इस समिट की सिनर्जी और एनर्जी दोनों बढ़ा दी है। साथियों, अभी यहां शिपिंग सेक्टर से जुड़े कई प्रोजेक्ट्स का शुभारंभ हुआ है। शिपिंग सेक्टर में हुए लाखों करोड़ रुपए के एमओयूज भी जारी हुए हैं। ये दिखाता है कि भारत के मैरीटाइम सामर्थ्य पर दुनिया का कितना विश्वास है। इस आयोजन में आपकी उपस्थिति हमारे कॉमन कमिटमेंट का प्रतीक है। साथियों, 21वीं सदी के इस कालखंड में भारत का मैरीटाइम सेक्टर तेज गति और ऊर्जा के साथ आगे बढ़ रहा है। खासकर साल 2025 भारत के मैरीटाइम सेक्टर के लिए बहुत अहम साल रहा है। मैं इस वर्ष की कुछ खास उपलब्धियों का जिक्र आपके बीच करना चाहता हूं। विजिंजम पोर्ट के रूप में भारत का पहला डीप वाटर इंटरनेशनल ट्रांसशिपमेंट हब अब ऑपरेशनल हो चुका है। कुछ समय पहले ही दुनिया का सबसे बड़ा कंटेनर वेसल वहां पहुंचा। ये हर भारतीय के लिए गर्व का क्षण था। साल 24-25 में भारत के मेजर पोर्ट्स ने अब तक का सबसे अधिक कार्गो हैंडल करके भी नया रिकॉर्ड बनाया है। इतना ही नहीं, पहली बार किसी इंडियन पोर्ट ने मेगावाट स्केल इंडिजीनियस ग्रीन हाइड्रोजन फैसिलिटी शुरू की है और ये उपलब्धि हमारे कांडला पोर्ट ने हासिल की है। एक और बड़ा काम हुआ है जेएनपीटी में। जेएनपीटी में भारत मुंबई कंटेनर टर्मिनल फेज 2 भी शुरू हो गया है। इससे इस टर्मिनल की हैंडलिंग कैपेसिटी 2 गुनी हो गई है और ये भारत का सबसे बड़ा कंटेनर पोर्ट बन गया है। ये भारत के पोर्ट इंफ्रास्ट्रक्चर में सबसे बड़े एफडीआई की वजह से संभव हुआ है। इसके लिए मैं आज सिंगापुर के अपने साथियों का भी विशेष आभार व्यक्त करता हूं। साथियों, इस साल भारत के मैरीटाइम सेक्टर में नेक्स्ट जनरेशन रिफॉर्म्स के लिए भी बड़े कदम उठाए हैं। हमने 100 साल से ज्यादा पुराने कॉलोनियल शिपिंग लॉज को हटाकर 21st सेंचुरी के मॉडर्न और फ्यूचरिस्टिक लॉज लागू किए हैं। ये नए कानून स्टेट मैरीटाइम बोर्ड्स को एम्पावर करते हैं, सेफ्टी और सस्टेनेबिलिटी को बल देते हैं और साथ ही पोर्ट मैनेजमेंट में डिजिटलाइजेशन का भी विस्तार करते हैं। साथियों, द मर्चेंट शिपिंग एक्ट में हमने भारतीय कानून को इंटरनेशनल कन्वेंशन के साथ ग्लोबली अलाइन किया है। इससे सेफ्टी का भरोसा बढ़ा है, ईज ऑफ डूइंग बिजनेस को बेहतर बनाने में मदद मिली है, सरकार का दखल कम हुआ है। मुझे विश्वास है इन प्रयासों से आपका, हमारे इन्वेस्टर्स का कॉन्फिडेंस भी और अधिक बढ़ेगा। साथियों, कोस्टल शिपिंग एक्ट को इस तरह तैयार किया गया है कि ट्रेड और आसान हो सके। ये सप्लाई चेन सिक्योरिटी को मजबूत करता है, साथ ही इससे भारत की लंबी कोस्टलाइन पर बैलेंस डेवलपमेंट सुनिश्चित करेगा। ऐसे ही वन नेशन वन पोर्ट प्रोसेस पोर्ट से जुड़े प्रोसीड्यूर्स को भी स्टैंडर्डाइज करेगा और डॉक्यूमेंटेशन का काम भी काफी कम हो जाएगा। साथियों, शिपिंग सेक्टर के ये रिफॉर्म्स एक प्रकार से बीते एक दशक की हमारी रिफॉर्म्स जर्नी का कंटिन्यूएशन है। अगर हम पिछले 10-11 वर्षों को देखें तो भारत के मैरीटाइम सेक्टर में जो परिवर्तन आया है वो ऐतिहासिक है। मैरीटाइम इंडिया विजन के तहत 150 से अधिक नए इनिशिएटिव शुरू किए गए। इनसे मेजर पोर्ट्स की कैपेसिटी लगभग दोगुनी हुई है। टर्न अराउंड टाइम में भारी कमी आई है। क्रूज टूरिज्म को भी नई गति मिली है। आज इनलैंड वाटरवेज पर कार्गो मूवमेंट में 700% से ज्यादा बढ़ोतरी हुई है। ऑपरेशनल वाटरवेज की संख्या 3 से बढ़कर 32 हो गई है। हमारे पोर्ट्स का नेट एनुअल सरप्लस भी एक दशक में 9 टाइम्स इंक्रीज हुआ है। साथियों, हमें गर्व है कि आज भारत के पोर्ट्स डेवलपिंग वर्ल्ड के सबसे एफिशिएंट पोर्ट में गिने जाते हैं। कई मामलों में तो वो डेवलप्ड वर्ल्ड के पोर्ट से भी बेहतर प्रदर्शन कर रहे हैं। मैं आपको कुछ और आंकड़े देता हूं। आज भारत में एवरेज कंटेनर ड्वेल टाइम 3 दिन से भी कम रह गया है। ये कई विकसित देशों से भी बेहतर है। एवरेज वेसल टर्न अराउंड टाइम 96 आवर्स से घटकर सिर्फ 48 आवर्स रह गया है। इससे भारतीय पोर्ट्स ग्लोबल शिपिंग लाइन के लिए और अधिक कॉम्पिटिटिव और अट्रैक्टिव बन गए हैं। वर्ल्ड बैंक के लॉजिस्टिक परफॉर्मेंस इंडेक्स में भी भारत ने काफी अच्छा सुधार किया है। और साथियों, शिपिंग सेक्टर में ह्यूमन रिसोर्स में भारत अपना परचम लहरा रहा है। भारत के सीफेरर्स की संख्या पिछले एक दशक में 1.25 लाख से बढ़कर 3 लाख से ज्यादा हो गई है। आप दुनिया के किसी भी समुद्री तट पर जाएंगे तो कोई न कोई शिप होगा जहां कोई न कोई भारतीय सीफेरर आपको मिलेगा। आज भारत सीफेरर की संख्या में के मामले में दुनिया के टॉप 3 देशों में आ चुका है। साथियों, 21वीं सदी का 1/4 हिस्सा बीत चुका है। इस सदी के अगले 25 साल और भी अहम है। इसलिए हमारा फोकस ब्लू इकोनॉमी पर है, सस्टेनेबल कोस्टल डेवलपमेंट पर है। हम ग्रीन लॉजिस्टिक्स, पोर्ट कनेक्टिविटी और कोस्टल इंडस्ट्रियल क्लस्टर्स पर बहुत जोर दे रहे हैं। साथियों, शिप बिल्डिंग भी आज के भारत की टॉप प्रायोरिटी में है। एक समय था जब भारत दुनिया के शिप बिल्डिंग का बहुत बड़ा सेंटर था, यहां से अजंता केव्स बहुत दूर नहीं है, वहां आपको 6th सेंचुरी का एक चित्र दिखेगा। इसमें एक 3-masted शिप का डिजाइन आपको मिलेगा। आप कल्पना कर सकते हैं 6th सेंचुरी के चित्र में 3-masted शिप का डिजाइन, और ये डिजाइन इसके सदियों बाद दूसरे देशों ने इस्तेमाल करना शुरू किया। सदियों का फासला था। साथियों, भारत में बने शिप ग्लोबल ट्रेड का अहम हिस्सा हुआ करते थे। फिर हम शिप ब्रेकिंग के क्षेत्र में आगे बढ़े। अब भारत फिर से शिप मेकिंग के क्षेत्र में नई ऊंचाइयां छूने के लिए अपने प्रयास तेज कर रहा है। भारत ने अब लार्ज शिप्स को इंफ्रास्ट्रक्चर एसेट्स का दर्जा भी दे दिया है। ये पॉलिसी डिसीजन इस कार्यक्रम में मौजूद सभी शिप बिल्डर्स के लिए नए रास्ते खोलेगा। इससे आपको फाइनेंसिंग के नए विकल्प मिलेंगे, इंटरेस्ट कॉस्ट घटेगी और क्रेडिट की सुविधा आसान होगी। और साथियों, इस रिफॉर्म को गति देने के लिए सरकार भी लगभग 70,000 करोड़ रुपीस इन्वेस्ट करेगी। इससे डोमेस्टिक कैपेसिटी बढ़ेगी, लॉन्ग टर्म फाइनेंसिंग को बढ़ावा मिलेगा, ग्रीनफील्ड और ब्राउनफील्ड शिपयार्ड का विकास होगा, एडवांस मैरीटाइम स्किल तैयार होगी और युवाओं के लिए लाखों जॉब जनरेट होगी, और आप सभी के लिए भी इससे इन्वेस्टमेंट के नए रास्ते खुलेंगे। साथियों, ये धरती छत्रपति शिवाजी महाराज की भूमि है। छत्रपति शिवाजी महाराज ने न केवल समुद्री सुरक्षा की नींव रखी, बल्कि अरब सागर के ट्रेड रूट पर भारतीय सामर्थ्य का परचम भी फहराया था। उनके विजन ने हमें दिखाया है कि समुद्र केवल सीमाएं नहीं, अवसरों के द्वार भी होते हैं। आज भारत उसी सोच के साथ आगे बढ़ रहा है। साथियों, भारत आज ग्लोबल स्तर पर सप्लाई चेन रेजिलियंस को मजबूती देना चाहता है। हम वर्ल्ड क्लास मेगा पोर्ट्स के निर्माण में जुटे हैं। यहां महाराष्ट्र के वाढवण में ही 76,000 करोड़ रुपए की लागत से नया पोर्ट बनाया जा रहा है। हम अपने मेजर पोर्ट्स की कैपेसिटी को 4 गुना बढ़ाने के लिए काम कर रहे हैं। हम कंटेनराइज कार्गो शेयर में भी भारत का हिस्सा बढ़ाना चाहते हैं, और इन सभी लक्ष्यों की प्राप्ति में आप सभी हमारे अहम पार्टनर हैं। हम आपके आइडियाज, इनोवेशंस और इन्वेस्टमेंट का स्वागत करते हैं। आप भी जानते हैं, भारत में पोर्ट्स और शिपिंग में 100% एफडीआई की अनुमति है। अभी पब्लिक प्राइवेट पार्टनरशिप तेजी से बढ़ रही है। मेक इन इंडिया, मेक फॉर द वर्ल्ड, इस विजन के तहत इंसेंटिव्स भी दिए जा रहे हैं। हम स्टेट्स को भी प्रोत्साहित कर रहे हैं कि वे इन्वेस्टमेंट को आकर्षित करें। इसलिए आप सभी अलग अलग देशों के इन्वेस्टर्स के लिए भी भारत के शिपिंग सेक्टर में काम करने का, अपना विस्तार करने का यही समय है, सही समय है। फ्रेंड्स, भारत की एक और विशेषता है हमारी वाइब्रेंट डेमोक्रेसी और रिलायबिलिटी. When the global seas are rough, the world looks for a steady lighthouse. और भारत ऐसे लाइट हाउस की भूमिका को बहुत मजबूती से निभा सकता है. ग्लोबल टेंशन्स, ट्रेड डिसरप्शंस और शिफ्टिंग सप्लाई चेन्स के बीच भारत स्ट्रेटेजिक ऑटोनॉमी, पीस और इंक्लूसिव ग्रोथ का प्रतीक है. हमारे मैरीटाइम और ट्रेड इनिशिएटिव्स इसी बड़े विजन का हिस्सा है. इसका एक उदाहरण है इंडिया मिडल ईस्ट यूरोप इकोनॉमिक कॉरिडोर. ये ट्रेड रूट्स को फिर से डिफाइन करेगा. ये क्लीन एनर्जी और स्मार्ट लॉजिस्टिक्स को बढ़ावा देगा. साथियों, आज हमारा फोकस इंक्लूसिव मैरीटाइम डेवलपमेंट पर भी है. ये तभी संभव है जब स्मॉल आइलैंड डेवलपिंग स्टेट्स और लीस्ट डेवलप्ड कंट्रीज को टेक्नोलॉजी, ट्रेनिंग और इंफ्रास्ट्रक्चर के माध्यम से सशक्त बनाया जाए. क्लाइमेट चेंज, सप्लाई चेन डिसरप्शन, इकोनॉमिक अनसर्टेनिटी और मैरीटाइम सिक्योरिटी, हमें मिलकर इन सभी का सामना करना होगा. साथियों, आइए हम सब साथ मिलकर पीस, प्रोग्रेस, प्रॉस्पेरिटी को और तेजी से आगे बढ़ाएं. एक सस्टेनेबल फ्यूचर का निर्माण करें. एक बार फिर आप सभी का इस समिट का हिस्सा बनने के लिए अभिनंदन. आप सबको बहुत बहुत शुभकामनाएं. थैंक यू.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf pro-am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए
Always a pleasure to speak with you, of course. Let me start with the market outlook first before I get to SEBI proposal, etc. What really is holding the bears back? That's the question I placed before the audience in the setup to this conversation, because we've been hovering around that 26,000 mark. So much has happened in terms of signaling from the Reserve Bank of India, GST reform, consumption boost over festive, but somehow we're not able to break out. Is it the trade deal that's concerning the street, or is it FIIs being hesitant?
So I will answer this in a more from a behavior perspective. If you really look at how the gold has rallied, the wealth effect, the people are able to spend more money because background wealth effect is there. Now, last 1 year, the wealth effect is negative for the mutual fund investors or the equity investor in general. Okay, and also coming from a background that from 2020 till 2024, we have seen extraordinary returns. So when you're talking about extraordinary relative basis, industry is unable to deliver return or the index is unable to deliver. So it's obviously when you are not able to make money, okay, so obviously the mindset is slightly more negative and you are more concerned about it. But look at the positive side, that the market has absorbed many negative news worst ever selling we have seen. Okay, we have seen the worst ever tariff-related challenges from the US market, worst ever geopolitical stress we have seen. The market has responded quite well. It absorbed the shock, and I think market is now ready for next round of takeoff. This is the small correction and consolidation phase we are going through. But the probability, if you ask me, whether upside is much more than the downside, then my answer is yes. We expect market to recover. Maybe after a small halt, then market should rally, and that's the perfect background is there, both from a behavior perspective, short position perspective, even the earnings perspective. Even IT earnings were far superior than the expectation.
Right. And in fact, I think earnings expectations or earnings performance is going to be a big driver. Now, Sandeep, what's the timeline like? From what you're describing, clearly now is a good time to enter and take positions because another rally or an up move is expected. What is the timeline? Are you seeing an improvement? Will we at least end this year, a calendar year on a 26,000, or is it going to be a 4 to 6 month wait?
So beginning of this summer 2082, we have broken into 4 quarters. I said the first quarter looks definitely attractive, which means effective 21st October till January 20th definitely looks like a very constructive background. Instead of talking about 1 year or 5 year perspective, let's go by, I will go by quarter on quarter. So at least from next 1 quarter, the outlook is definitely more constructive for Indian equities.
Okay. Sandeep, outlook is more constructive, over the next 1 or 2 quarters is what you're saying. If you have to look at valuations and the cycle we are in right now, which are the pockets of growth that you're seeing? Because GST reforms absolutely in place, a boost to consumption is what everyone is talking about. But when do you see that flip happening where valuations will be favorable, returns will be favorable, and a best time to invest then?
We always say India in a structured bull run, something has changed for India from long-term perspective, which means the P multiple or the valuation multiple on any factor you look at will remain elevated for a longer period of time. If somebody is expecting the market this valuation will correct decisively, that will be buying opportunity. I don't think he or she will get ever that opportunity. That's something which I always talk about from a perception analytics, something has changed for India. That's the first point. Second point, what we have to look at how the liquidity cycle is changing from a near-term and medium-term perspective, and how the momentum on the earnings. So we are very clear on that front that sentiments have reached a rock bottom sort of thing. We are seeing signs of exhaustion there by selling. We are seeing signs of exhaustion in the USD INR as a pair. We are seeing signs of exhaustion in terms of short buildup, which is there. So multiple. One way of looking is that when we say that what sort of upside you look at, the first thing I'm looking at, my downside is getting capped. The exhaustion signs are very visible, which means the upside could be much more than the downside. As far earnings momentum is concerned, we have been saying that we expect maybe by end of September quarter earnings, things will start looking up. And so far, results have not disappointed. It's going in that direction. So I think I would like to remain a constructive approach for Indian equity from the current level. And that's the reason we are largely 96-98% invested in most overseas.
Okay. And Sandeep, in terms of individual sectors as well, you have been absolutely positive when it comes to the pharma pack. Still, the move is pretty much sideways. Now, if you're looking at pharmaceutical as a sector currently as well, which space within pharmaceuticals is your investment bet?
See, from the current level, the biggest safest bet is the US generic. Okay. And even Trump has clarified, the administration has clarified, there's no duty or anything which they are looking on the generic side. And because generic is something which the US is also dependent on India. So that's the one area where I'm constructive. Apart from, then we are more inclined towards domestic centric economy stocks. So whether you talk about a consumption stock or large infra stocks or large hospitality space. So in general, I'm more constructive on the domestic centric, except the pharma, which is the only export centric. And even you look at some of the textile names, they have corrected significantly. So some of the shrimp manufacturer, all these names, because in the sentiments which was not in our favor, these stocks have corrected. So anything which looks like a buying opportunity, provided you believe the deal will happen, we believe deal will certainly happen. It's a question of time, because in a larger interest, even US needs deal to get close. So some point in time it will happen, whether it take 1 month's time more, but it it is something which is certain. Timeline is very difficult to predict, but we expect maybe by end of November it should settle down.
Okay. Sandeep, I want to talk a bit about the BFSI space. And today, because the focus is on SEBI's proposals on total expense ratio, charges, etc., with the idea of rationalizing it for investors. First of all, your take, bit of a debate going on whether this is good, whether this is bad, what it will do for the industry. So let me start from there.
So I think I have not read line by line, broadly I have gone through it. I think such proposal will come on time to time, and I think the regulator intent is very clear how you can enhance the investor return. That is their endeavor. So we are absolutely fine with that. But the only thing which we like to add, so far regulator has only focused on the tier or the expense ratio of the AMC, where we expect the regulator should also look at the cost structures of the intermediaries. There's no regulation which actually restrict their numbers also. Like we are talking about that asset management business have grown, so your expense ratio along with your AUM should come down, which is fair. But this is also should be applicable to the market intermediary, people who provide support to the mutual fund industry. Their expense also should be brought down significantly. They have not been corrected at all. That is one of the pain point for mutual fund industry, where the intermediary cost structure, there is no control, where regulator is only bringing down the cost structures of the expense ratio of the AMC side. I think some amount of rationalization is required there also. Then only we can bring down these cost structure in an effective manner.
In terms of the capital market as a segment or a pocket of investment, of course, you're seeing some reaction today. So now I've asked you first from a policy point of view, and of course, we agree that lesser costs, more investors, some rationalization. But from the point of an investment bucket of the capital market play, beyond AMCs as well, do you think the best is behind us and that boom is behind us, or is there more to come?
See, maybe from a multiple perspective, you can say maybe it has peaked out from a multiple perspective, but not from a multiple perspective. Earning momentum will continue because industry is growing, economy is growing. When we talk about the breadth and the depth of the capital market, which is rising, and obviously AMCs and the life insurance companies and the wealth management companies are by default beneficiary of this move. So we remain constructive in that sense. So earning momentum, I don't see a challenge. The challenge is about whether we think whether this leads to some amount of capping in the multiple. So multiple expectation has to be brought down, or they can correct from the current level what we have seen. So that would be the only worry which I see, not from the earning perspective.
Okay, so earnings perspective, you're not seeing a worry. Does anything change if you have to look at a SIF versus a SIP right now with all of these moves? What happens? Because I know SIF is a pretty new product right now. Where do you, if someone has to allocate money through a SIP and SIF right now, Sandeep, what would you tell them? I have 100 rupees. How much should be allocated to a SIF? How much should be allocated to a SIP? Because it's not tried and tested to that extent yet.
See, first of all, you have to understand that SIF, which SEBI is brought very recently, is also a very unique product. It actually brings some amount of conservatism in your approach. So the way we are advising our investors, whenever we have given interview, we always talk about that. You should look mutual fund schemes as well as the SIF strategies in tandem. As a combination, you should look for opportunity, because it actually reduces your overall volatility. And if I'm talking about combined portfolio, it brings down your vols, it gives you better diversification, and it also give you additional source of alpha by shorting. Okay, so it's a combined approach is a better option. As far as SIP is concerned, or the investment on regular basis, you can do in a mutual fund also, you can do in a SIF also. So I think it's up to a very individual investor what sort of investment horizon and what risk appetite he or she has. Based on that, but somebody asked me very simple thing, what should be my ideal mix? I will say next 5 years, you should have 50% mutual fund and 50% SIP in your portfolio. That will give you a very balanced portfolio.
Okay. I just want to talk about a few other buckets which look interesting. One is, of course, BFSI and also metals. Now, metals, Sandeep, I want your view from the perspective of what's happening with the trade deal. While we're still waiting for the US-India trade deal, the US-China talks have taken center stage, and we don't quite know what will come out of it, but there seems to be some framework of an agreement. Do you see that metals rally just being at its, at its start at this point?
I don't think metal has been rallying for a while. Along with precious metal, I think globally base metal prices have also moved up. So I think it's in a tandem, it has worked very well, and now we have to see whether precious metal has peaked out, and which we believe it has peaked out. It can collect 20% odd from the peak of the levels, whatever we have seen, which can also lead to some amount of softening in the sentiments at least, okay, if not the exact trend. But what is very important to understand out here in the metal is not just a domestic phenomenon. It has a lot of currency linkages. It has a lot of global perspective. So you have to be very clear when you trade in the metal stock. If you have ability to track these data points more closely and you understand these dynamics, then only one should invest, because this is a relatively more complex and has many global inputs.
Just talking about the trade deal with India, Trump, who's speaking right now, and you're seeing those live visuals on the right-hand side of your screen, he's speaking in South Korea, has just said, I'm going to do a trade deal with India and I have great respect from Prime Minister Modi. Just, a follow-up on Sandeep, this trade deal going back and forth. Is it top of mind for markets, or is it now, if it comes in, a big positive, but if there is a delay, we're still, we have our own jig going on?
So I think it's not on the top of the mind, but definitely they're in the subconscious of most of the market participants, because something which can even, it will act as a catalyst. Let me put this way, a lot of people have written off the trade deal, but I think as one point I said in the beginning, it has to happen, because Trump is always a deal maker. He's not a deal breaker. He's a business guy. And appropriate time he will do it. He might do with his own terms and conditions. That's the reason we are seeing the delay. But it will definitely act as a catalyst as and when happen. And that catalyst should be definitely will be capitalized by many institutional investors, because many institutional investors like to see certainty rather than preempting that. So maybe the worry which you talked about, the institutional money which can come, maybe the post that deal, FI inflow can also increase, because this sort of deal will also support the rupee appreciation. That will also give them some amount of stability or calmness in the currency market, which will attract the FDIs or FPI both.
Yeah, this is going to be interesting, because you're already seeing comments coming in from Trump where he's saying he's going to do a trade deal with India, and he has high respect for Prime Minister Modi, as Tamanna was mentioning as well. But one aspect, Sandeep, I want to talk to you about is what is your view with regards to PSUs? Because you've been way ahead of it. Last year, you mentioned you were pretty much positive. A whole host of PSUs that report numbers in today's day of trade as well, from a HPCL, BHEL. How are you looking at this space? What would you advise investors to do?
So we have been very constructive on PSU for a while. If I write from September 2021, we have been talking about this is the decade belongs to them, because we are now entering into a structured bull in the value asset thesis. And you can see the best example globally is Japan is a value market, and you see Japan is making all-time high on daily basis. Okay, so this is a very classic example where a lot of disbelief was there for Japan, and so is the case with India on the value side, and so is the case with the PSU. So I think one have to only keep in mind in an extreme risk of environment, PSU will suffer, because they are largely high beta names, and hence the impact is more meaningful. But what is very important, what we like about PSU, valuations are very attractive, a very fair price you get. They're very liquid in nature. Our biggest concern in our market is that the impact cost has risen sharply in last 12 to 15 months and is not coming off now. And hence, liquidity of the portfolio is very vital for us. So we always talk about the risk off period is all about liquidity, safety, and then returns. So PSU gives you fair value on the valuation perspective. You get these are liquids of very, very liquid names, and it gives you a psychological comfort. They are relatively under-owned. So I think what is important, if you think it's a risk on rally, which we believe, then PSU will outperform. In a risk off thing, they will underperform.
That's with PSUs. How are you looking at BFSI? Tamanna did speak to you about the capital market companies. Now, if you have to look at insurance, if you have to look at NBFCs and banks, within the three buckets, where would you put your bets?
So as compared to private bank, which has been the darling of the market for the last many years, in last few months, we have built a very sizable exposure in the NBFC space. So we like NBFC space better than private sector bank. Okay. And obviously in banks, we still like PSU over private sector bank. That's a no-brainer trade. And second thing important is also even the insurance company we like. I think they are in the value territory. They are in the neglected zone. A good amount of under ownership exists. People are tired with this name for a while. But given the strength in the economy and the capital market, we always say that insurance is a sunrise industry, and some of the challenges the industry has seen very recently in last 1 year on the taxation related challenges. We as a house bond is very bullish on this space from a longer term perspective. So it will be a slow and steady move. Don't expect any decisive move coming in these names, but it will give you a lot of strength to your portfolio. Good amount of safety is there, and these are also largely liquid names.
Okay, Sandeep, another big focus right now is what's happening in the primary market. And sometimes I think there's more action in the primary market than what's happening in the secondary markets or the cash markets. And a topic of discussion right now is valuations of a particular company that wants to list. And I'm not asking you to comment on that company or those valuations if you're not comfortable. But just to give us a sense of this gauge that investors need to look at, it seems like this is a time when a lot of companies who have been waiting on the sidelines want to come out and cash out. Investors and early investors, angel investors want to come in and cash out. What should you look out for? And is this a concern?
For us, as a relatively conservative house, we think this is the biggest concern we have. And everybody, even the best of the brain in this country, are getting carried away. It's not about people are blaming the bankers or the companies. The money managers themselves are participating. Some, like one of the promoter recently said, if somebody is willing to pay, the money manager, the fund managers are willing to pay me 200 or 250 multiple, why will accept it? It's a demand supply situation. So if demand is so skewed in their favor, it makes a lot of sense for them to exit. It is the maturity of people now, because my worry is that many young people have come who have not seen these cycles, and they are all very, very excited about it. And this is the way human psyche is all about, when you see M2M game coming and everybody is making money, that sort of some amount of hype is getting built in the market. And that's my biggest worry, because these are A, very expensive. B, when whatever reason sometimes the stocks start correcting, there is no exit in these names, absolutely illiquid names. You look at the last 1 year, if I'm not wrong, 60% stocks are trading below the IPO price. So those are the concerns which we have. Yes, short term, everybody is very happy because of illiquidity reason. The float is not there. It's easy to pull up these names. Those are the phenomena which is going in the market. And our worry is there. We generally tend to avoid all these names. As a house, we rarely invest in some of these expensive names.
No, so I have a counter to that. The other side of that conversation is that there are some new age companies that you cannot look at in terms of a conventional valuation metric. Their TAM, or the total addressable market, is something that you can't envision right now. And that is what the valuations are talking about. Don't look at it like you would look at an old economy company. That's the argument. What would be the counter?
I will give you a very fair answer. Okay, I will straight away compare how these companies are valued in the US market, which is a very mature market. If US is not willing to pay these companies these sorts of absurd valuation, then why should I pay in India? Okay, and look at some of the companies from Korea got listed. They are saying they are not getting that multiple in their own country. It looks like some of these companies will now list in India because India is paying the premium, and hence people will come. There's a joke people talk about, let MNC company make India as a headquarter and subsidiary in Korea or other countries. That's the way people are talking about. So it is a stupidity on a part of our industry that we are giving these absurd valuation, and then we'll blame at later stage, flow was very, very large, we have to deploy this money. So our benchmark is US does not give these sort of valuation, and that's a more mature and evolved market. Okay, so I will give a comparison out there rather than just looking Indian valuation in isolation.
Okay, so Indian valuation should be looked at in isolation, but so Sandeep, clearly, you know, with these kind of valuations which are coming in for new age companies, would you tell investors not to really invest at IPO stage? Look at them post-listing, and that's when the retail participant should enter.
I think we as a house, we are not in the business of advising people what they have to do. Okay. What they have to understand is they have to assess their own risk appetite, their own investment horizon, and their own experience with these names. So people do have to recollect what happened in 2000, how you reacted, how you managed 2008 crisis, how you managed 2018 peak cycle, and how you'll manage something like this. So if you have managed those cycles very well, please go ahead and invest up substantial money because you are smart enough to exit at the right time. If you are not able to manage those cycles well, then one has to be cautious. That's the only piece of advice I would like to give.
Okay. Thank you so much, Sandeep, for speaking with us today and wise words coming in from Sandeep Tandon, founder and CIO of Quant Mutual Fund. Feroz Aziz joining in this morning, joint CEO of Anand Rathi Wealth. So now, Feroz, this, you know, whether you think this is good or bad depends on who you are and which side you're sitting on. So for a lot of your investors, I suppose this is just what the doctor ordered. How are you looking at it?
See, I'm looking at it. In fact, I think it can, if all of us sit on the side of the client, which is what I think in financial services is a fiduciary responsibility you should. We'll all see this circular as a great circular, point one. Of course, there are some scopes of improvement, and that's why it's a consultation paper. Now, if you break this down into economies of scales, transparency, and investor rights, and break this down, of course, there's a lot to talk about. If your viewer wishes to know. Basically, when it looks at, like Charu was mentioning, the slab rates, one thing which I think every viewer should take a note, it is slab-wise as an income tax slab. So even a scheme with 1 lakh crore will have these 225 to 1.75 and so on and so forth. These are like income tax slabs. That's point one. Point two, transparency need was extreme. As a distributor, it becomes very difficult for us to comprehend what is the distributable TER. There are two concepts, which is called total expense ratio and distributable expense ratio, DTER. For us to understand what should be our brokerage, we have to arrive at distributable TER of the asset management company. In spite of having 20 people doing only mutual fund research, they find it difficult to arrive at the distributable TER because each expense of each scheme is different. Somebody is paying more brokerage if there's more charge. So transparency need 10 on 10. Economies of scale, I think SEBI has to acknowledge one point that economies of scale in the entire value chain don't exist. An asset management company has very little fixed costs, has very little variable cost beyond a certain point. But a distributor has a consistent variable cost and lesser fixed costs. So economies of scale should be seen with very different lens, in my opinion. If in 10 years the customer should get great service, he needs to have the distributor alive. Especially when there is a direct scheme for a person to cut the distributor and go, then you should not ideally in the long run tinker around too much with the regular scheme so that there is some longevity. I'll stop here, Tamanna.
Absolutely. Feroz, good morning. Feroz, good morning. Alex here. And so your point is well made. I want to understand a couple more things because one thing that stood out to me is the removal of STT, GST, CTT, stamp duty, your statutory limits or levies rather from the TER, and it's going to be charged outside of that. What is the implication of that? Can you explain it?
Sure, Alex. The implication of that first is complete transparency of what is the management fee, what are the taxes and brokerage. Once they get separated, there is more management possible in this separate bucket. Asset managements will start competing even on costs because if I'm paying brokerage of 12 bips for an equity scheme, that's what is cited in this consultation paper. SEBI is noticed very clearly such microscopic lens. I'm so honored to be under the garb of, under the auspices of SEBI. they have noticed that in equity schemes, brokerage is 10 bips, for example. The same asset management company is paying only 0.1 bips, 1 bip for arbitrage funds. When a retail guy today gets zero brokerage, practically zero brokerage on derivatives, somebody who's managing 5 lakh crores, should he actually charge a brokerage? Maybe. Is there institutional broking giving research to people? Yes, they are. Can they be paid separately from the P&L of the AMC? So I think all these are questions which are coming because of the separation. So transparency, and when you separate something, you start managing it. You start competing on it. You start having efficiencies built in. So 10 years from now, if they're separate, I think efficiency will automatically be the next resultant outcome, benefiting everybody from a client standpoint.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है और
Tata Trust's fight has reached a breaking point after the ouster of Meli Mistry from the Tata Trust's board. Now, this saga began when cracks emerged between the two factions of Tata Trust, namely the nominees on the board of Tata Sons and the non-nominee trustees. Several aspects from governance, sharing of information and Tata Sons board appointment have really widened the rift between the two factions of Tata Trusts. Now we are discussing what lies ahead with Meli Mistry's ouster. Sources do tell NDTV Profit that there can be legal optionalities available for Meli Mistry. What light will it put Tata Trusts in, and what could be the legal and technical aspects of this? Let's discuss it with our team of experts joining me on the show today. Let me welcome on the show Supreme Court lawyer H.P. Ranina, Sanjay Asher of Crawford Bailey, Anil Singhvi, chairman of Icon Investment Advisors, and finally Image Guru Dilip Cherian. Gentlemen, so good to have you on NDTV Profit. Now, my first question to you, Mr. Ranina, on the legality of the aspect, for Meli Mistry, do you think there are any legal options available?
Thank you for having me on the show, Nisha. Yes, to answer your question, certainly all options are available to anybody. Question is whether those options will be exercised. That is for each person to decide. But the options are that they can challenge that ruling before the Charity Commissioner's office. And in the Charity Commissioner's office, this can be done on the ground that anybody is free to vote one way or the other, but that vote has to be cast based on certain criteria. There has to be some bona fide reason for removing a trustee. Now, there must be something to show that something has gone wrong.
Right.
I read in the press today, this morning, I don't know whether it's right or wrong, but I read in the press that he was removed because of certain disruptive tactics.
Yes.
Of Mr. Meli Mistry.
So Mr. Ranina, okay, I wanted to set the stage with this particular question because the House is divided whether or not Meli Mistry has legal options or not. So that's why I wanted to get your view, a legal opinion on whether or not there are other options as well as remedies available, or is this ouster really certain and permanent? So since there are legalities involved here, that means this particular fight is here to stay and there could be some steps taken. Now, looking at that particular optionality, Dilip Cherian, with this fight really becoming bigger, how does it put Tata Sons and Tata Trust's brand positioning? What reflects on the corporate governance standards, and how will it now be viewed from outside?
Thanks, Nisha. The doubts about the way this will play out are bound to play on the minds of those who are in key decision-making positions across corporate India. The Tata Group is a very large group. Its brand value is based on the fact that it has a steady hand at the tiller, and therefore it has had no problems largely, except for two very large and convoluted issues which happened some time ago. So does this affect how corporate India will look at Tatas? The fact is that it will. There is no doubt that corporate India recognizes that the trouble at Tata Trust could eventually spill over into Tata Sons. Is that good for Tata Sons, or will Tata Sons manage to stay completely in a silo and not affected by what is happening in the ownership structure, which is one level above Tata Sons? So if Tata Trust goes through this merry-go-round, which has just begun, then it is likely that some people will wonder how much impact it will have on the Tata Sons operation. It is not meant to have any, and the image of Tata Sons has always been that Tata Trust acts like a good shareholder and supports and ensures that Tata Sons leadership provides the kind of leadership that will give the kind of returns and the brand values that the House of Tata has always represented, both for corporate India and for consumer India.
Right. So, Dilip Cherian, you made a point that will it have a bearing on Tata Sons with so many listed companies? Let me then put the spotlight of corporate governance angle on this, and let me also welcome Anil Singhvi into the discussion. Anil Singhvi, what do you think about the bearing of Tata governance, Tata's governance standards when it comes to Tata Trusts, which is also the largest shareholder of Tata Sons and has the option of nominees on the board of Tata Sons, and therefore, how does this particular event impact Tata Sons' positioning and corporate governance standards?
Thanks, Nisha, for having me. I think let's look at it a little differently. Was he really removed or his reappointment? It was really the reappointment. But a reappointment cannot be taken for granted, be it in a trust or be it in a corporate world. Okay? So whosoever are the constituents, whether it is the trustees or whether the shareholders, they in their right have a situation to re-examine whether the person should be reappointed or not. So I think to look at it that he was removed may be perhaps a misnomer and a misread of a situation. Now, second question which I have in my mind is about the corporate governance or the governance of the trust. Mind you, Nisha, these are public charitable trusts. They have been set up almost a century back by the two very honorable people, Sir Ratan Tata and Sir Dhanarji Tata. I think they bequeathed the entire their personal wealth in these two trusts. So today the word is trust, and these are the public charitable trusts recognized by the government. They do not pay taxes because these are for larger public cause. In fact, when I looked at it during last 1 year, they have contributed about 700 crores, and out of which almost 70% was towards education and medical, which is health. I think these two trusts have done a human's job in terms of setting up the institutions and what you have. I think it is really unbecoming today, if I may use that word, for them to really have this public spat. I think they have to remain within the four corners of the governance, and public charitable trusts have to really, and particularly for, as Dilip rightly said, the Tata name itself is a huge leap of faith. And I think they must carry at all costs. I think these kind of public spat which happened in 2016 and getting repeated in 25 doesn't hold good. And corporate governance or the governance of the trust, in fact, to be even much bigger than normal squabbles which we see in the families and the feuds.
Right. So, Anil Singhvi, there is one point here on, you said that the renewal cannot be taken for granted. It was not a removal, it was non-renewal. That's a very important technicality. Let me also get in a legal opinion on that. Sanjay Asher, the main mood of, the legality of this being really questioned and contested in court by Melly Mistry is the resolution of October 17, 2024 that the trustees had signed, which says on the expiry of tenure of any trustee, that trustee will be reappointed by the concerned trust without any limit being attached to the period of tenure, which meant life trusteeship, which Venu Srinivasan got. Sanjay Asher, how do you read into this resolution, and do you think Melly Mistry's non-renewal was legal or illegal?
Yes, to my mind, if there is a resolution to that effect by the trustees, and the trustees have applied their mind, both from a trust deed perspective as also from the trust law perspective, in which event there has to be a good reason as to why are they not obeying or why are they not following that particular resolution, and ruling something which is against that particular resolution. In other words, that resolution of September of 2024 has to be followed, because that is a valid legal resolution, both in law as also under the trust deed. And therefore, they cannot surely do something which is totally against the resolution which they've decided.
Right. So you are saying that there is a point here. HP Ranina, your legal opinion on the resolution, and where does also Venu Srinivasan's renewal really now is seen, because Melly Mistry had put a caveat that all the other renewals will have to be approved by the rest of the trustees, and on the basis of that, I am approving Venu Srinivasan's renewal.
I entirely agree with what Mr. Sanjay Asher has said. Please note that when a resolution is passed, under the trust deed, it is binding on the trust. It is binding on all the trustees. Now, if they want to rescind that resolution, then they have to pass a second resolution rescinding the first one, and then they can vote as they like. But so long as the earlier resolution passed on 17 October 2024 is there, under the trust deed and under the trust laws, it is binding on all trustees. And if a trustee has gone against that resolution, he is in breach of the law. Is a trustee who has gone against that resolution of 17 October 2024 who has been in breach of the law. Therefore, what Melly Mistry did was he said, yes, I am going by Mr. Venu Srinivasan's appointment, because I was a party to the resolution of 17 October 2024 that all should be reappointed and for lifetime. And therefore, he gave his approval to that. Now, yesterday they went back, 3 of the trustees went back on the earlier resolution, which they themselves had passed, without rescinding it in the first place. If you want to rescind, all 7 must rescind it. You cannot do it piecemeal. 3 out of 7 cannot rescind it. It is binding on them under the trust deed and under the Bombay Public Trust Act and the Maharashtra Public Trust Act.
So are you saying that then this particular matter is very much tied to Venu Srinivasan's renewal as well?
Well, I would say Venu Srinivasan's renewal is valid because it is as per the earlier resolution of 17 October 2024. I don't want to go into that. I'm talking about the current resolution which was passed yesterday. That is contrary to the trust deed because the 3 trustees have violated the resolution which they passed on 17 October 2024, and therefore it is this resolution passed yesterday which is invalid.
Right.
Because they have no right to go back on what they had decided earlier.
All right. Anil Singhvi, from the governance point of view, the same trustees deciding for themselves that they'll be trustees for life. What do you have to say about that?
I think I would like to go back in 2024 when this resolution was passed. It was soon after, I suppose, Mr. Tata's death, that this resolution was passed, saying that all the trustees will be there for the lifetime. To my mind, from the governance standpoint of view, this is a bad resolution. I don't think public charitable trust should, and the trustees themselves should decide what the tenure will be. That means once it is appointed, then appointed for lifetime. Just imagine if somebody at the age of 30 or 35 is appointed, is he going to be there for next 50 years? I think that's a very poor governance. So this resolution of 24 itself, according to me, doesn't really meet the eyes of the good corporate governance or good governance per se. I mean, you look at even the Prime Minister, President, everyone has a limit to which they can be appointed or reappointed. thereafter. And the reappointment will all depend upon the constituents who are going to support or oppose. So it cannot be that I'm appointed for the lifetime. And then when you look at it, 5 or 7 of them, they themselves appoint for the lifetime. I mean, it's a very poor governance. And particularly for a charitable trust, public charitable trust, mind you, I'm repeating again.
That's the key word. That's the key word, Anil Singhvi, and I will take it to Dilip Cherian. Dilip Cherian, power struggle and also assuring their permanent position in a philanthropic charitable trust. What does it really reflect on Tata Trusts in your view?
You know, the lawyers and the corporate governance people have spoken about the relevance of trust deeds and its significance and the ethics and morality with resolutions talking about lifetime charities. But Tata Trust is not just any other company or any other trust. It is actually quite a significant, significantly visible emblem of how a certain group has managed its affairs over many decades. I think that is the reason why government was triggered into intervening. The point is that, you might have legal battles, but clearly the trustees who voted against the renewal of Meli Mistry must have some clause in that trust resolution which allows them to oust a certain member. What it is, we don't have clarity on, and we have no visibility on it at the moment. But the fact is that knowing how legal and how well geared many of these people are, and how there is talk of everybody in the group lawyering up to take into account whatever is going to be the next steps, I think that there is certainty that government's intervention in this is the result of sensitivities which may have been trampled upon, and which government wants to make sure that very clear guidelines are in place so that Tata Sons itself is not disturbed.
Right. So that's the key point there, Dilip Cherian. Tata Sons cannot be disturbed because of the infighting in the trusts, which has the majority stake in Tata Sons. But HP Ranina, the point here also raised by Dilip Cherian is whether the removal is legal. What's your opinion?
No, as was mentioned earlier by Mr. Singhvi, this is not a removal. His term came to an end and had to be reappointed. Now, having that in mind, they had passed that resolution. I agree with Mr. Cherian that maybe it violates principles of good governance. But whatever it may be, that resolution has been passed. All the 7 trustees unanimously passed a resolution on 17 October 2024. And as I said earlier, that is then binding on them. Whether it's good governance or bad governance is a separate issue. But this is binding on them. And as Mr. Cherian rightly pointed out, if you want to vote against it, then you must first rescind that resolution and then put it to vote in the normal course. But so long as that resolution of 17th October 2024 remains, they cannot go against, they cannot bypass that resolution in any form whatsoever. If they bypass it, that is illegal. They have committed an illegal act by bypassing that resolution.
All right.
Coming on to the Tata Sons issue.
Yes.
You see, there is a Supreme Court decision.
Yes.
As you recall, of Justice Bobde. Chief Justice of India, along with 3 other members at past, had decided that case of Tata Sons versus Cyrus Investments Limited.
Yes.
In that decision, the Supreme Court has said that the directors of Tata Sons are duty bound, especially the nominee directors are duty bound to keep the trustees informed of all decisions which are taken at the Tata Sons meeting. Because as you rightly pointed out, 66% is held by the Tata Trust.
Absolutely, H.D. Ranina, and that is the point that I was coming to next. The bigger aspect of the fractions, two fractions being created, was between the nominees to the board of Tata Sons and the non-nominees. And the Articles of Association of Tata Sons, 121, does give some veto rights to the trustee nominees. Very quickly on that aspect, what's your view?
Well, my view is that this is binding, especially now when the Supreme Court of India has ruled on this. There can be no third opinion. Once the Supreme Court has ruled, a Supreme Court decision is as valid as any law of the land under Article 121 of the Constitution of India.
Right. So, Sanjay Asher, I'll throw the same question at you. The discomfort amongst the non-nominees, as our sources have also told us, has been that a lot of decisions were not being communicated and they wanted more information. On the legal side, what is your opinion in terms of the nominee's position, fiduciary responsibility as the board member of Tata Sons, and they being there by way of being nominated by Tata Trusts, which is the largest shareholder?
Correct. So usually you pass a resolution, whether it is a corporate entity or a trust, nominating an individual on the board of a company.
Right.
And that particular nominee individual who has been appointed has to follow the diktat of the resolution of that trust, that he is being appointed with certain responsibility, with including a responsibility to report back to the trust. So it can't be that he cannot report back to the trust or to his fellow trustees. And number two, he has to strictly follow the diktat or the resolution of the trust, pursuant to which his appointment has been made on Tata Sons. So in other words, if the trust tells him to veto certain items, then he can veto. If the trust says, no, you don't have to veto, then he has to give the votes in affirmative. So in other words, he cannot act on his own whims and fancies. He has to strictly follow to the resolutions of the trust pursuant to which he is being appointed, and he cannot act on his own.
Right. So, Anil Singhvi, there are two important aspects that we have brought about in this discussion, which have been key to the current fight in the Tata Trust. One is the reading of the resolution and whether or not the renewal, non-renewal have been legal. And the second, the communication of the information from Tata Sons to the Tata Trusts by the nominees. Given this scenario, very quickly on the measures that Tata Trusts must take for higher standards of corporate governance.
Nisha, I would just want to bring it back to 2024, that resolution. If that resolution was valid, which I've heard from both the lawyers, and I use respect for both of them. If that resolution was a valid resolution, then where was the question of this renewal coming? Because then they appointed all of them themselves for lifetime.
Yes.
If they appointed them in 2024 for the lifetime, then where was the need of in 2025 coming back with any renewal of that or reappointment of that? So I'm still very unclear about it.
Very
if that
valid
resolution
point.
was so binding, and it was almost like a trust deed saying that all nominees or all the trustees from 2024 will be on the trust till such time the God has its own will. So if that was the case, then there was no need for any 2025 resolution, be it for Venu Srinivasan or for Melly Mistry to come in.
So this means it can be challenged. It seems what you are saying, that means it has the other side of the legality as well, since you are questioning it. Right.
So why did it come for voting again? And second question is the relationship between Tata Sons and the trust.
Yes.
And which was, according to me, in 2016 also was the issue between Cyrus and Ratan Tata, that whether Cyrus was really doing what the trust wanted it, and it was more or less a fractured situation.
Yes.
And I think going forward, this could also be a situation where Tata Sons chairman and Tata Trust chairman are two different persons. So I think we need to even see how this the relationship going forward is going to be. Today, the trust itself is having a problem of the trust, as I call it. Going forward, how the trust will really then work with Tata Sons to get much better governance at the trust and at Tata Sons, I think we still have to see the battle with lines are drawn already.
Right. So battle lines are drawn. Dilip Cherian, your final word on how do you see this really impacting the big picture of the kind of brand premiumization that we have seen with the Tata name and back-to-back two kind of power struggles, the impact on it and the way forward?
My take on it is that as long as Noel Tata is confirmed and safe in this position, Chef Chandra running the companies as he has been doing competently, and as long as this battle does not become a long and bloody battle and the Tata name does not get sullied in the process, you're going to see the group emerging at least as good as it was, if not better, at the end of this struggle. This tussle was, as Anilji has quite rightly put it, strange and mysterious. But as Mr. Rainina says, the law seems to be quite clear on this. And if every player plays along, and if government is not forced to intervene too much, we're going to have a strong Tata Sons emerge, and that's going to be good for the economy and for the group itself.
Right. So many questions still unanswered. Whether there will be a court case challenging Meli Mistry's ouster, whether or not Charity Commissioner will intervene, what is the position of the government which earlier tried to intervene. So all that we are going to see going forward. But thank you so much, gentlemen, H.P. Ranina, Sanjay Asher, Anil Singhvi, Dilip Cherian, for joining us in this very, very insightful discussion on the various aspects of this Tata Trust rift. Thank you so much for joining. And while we track this, many more developments to really follow up on going forward. All eyes would be on that, on the Tata Trust's rift. With that, it's a wrap on this special show. Thank you so much.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
welcome. You're watching Market Express and I'm your host Himakshi Bahugna. And now let's get straight into the show. But first up, let's see how the markets have fared today. So it was a good day of trade on the Dalal Street, with Nifty managing to close above 2600 and the Sensex reclaiming the 85,000 levels. So benchmarks have ended the day near day's high. Now, speaking of the highs, Nifty Oil and Gas and Energy lead the gains. Metals and FMCG, follow the suit. Auto and Defense, on the other hand, have ended the day in the red. Auto stocks took a breather today ahead of October sales data. A technical pullback and profit booking hit names like M&M, Tata Motors and also Eicher Motors. But analysts say that the fundamentals remain solid, with festive demand likely to steer the sector back on track soon. Next up, we have metal stocks that shimmer for the fourth straight, session. So investors cheer hopes of a positive Trump-Xi Jinping meeting that is to be held tomorrow, and also expect a Fed rate cut that is to happen tonight. So domestic demand stays strong, prices hold firm, and also brokerages remain bullish on ferrous players. So the industry pushes for anti-dumping duties as global rates stay elevated. Copper prices surge as structural supply tightness and rising cost curves grip the market. A key disruption at Indonesia's Grasberg mine adds to the pressure, while demand from the data centers and also electrification continues to climb. The macro backdrop stays supportive, with analysts flagging copper deficits in the years ahead. As the world leans into green energy and also digital infrastructure, copper's role becomes even more critical. Capital market stocks are under pressure in today's trade. Asset managers and also brokerages have slipped after, SEBI proposes a cut in total expense ratio. So this is a move that could actually hit the earnings across the board. Adding to the uncertainty, the street is still digesting SEBI's long-term F&O expiry plan. With regulatory changes looming, investors are treading cautiously around the capital marketplace. Adani Group stocks buzz in trade today. Adani Green Energy jumps on strong Q2 operational efficiency, while Adani Total Gas reports a 16% rise in the volumes year-on-year. Adani Green Total Gas and Energy Solutions rally between 6 to 10%. Adani Enterprises and Adani Ports top the Nifty gainers list. Strong buying and volumes across the board reflect renewed investor interest in the group. The Blue Dart Express is running faster than ever, delivering an earnings report this quarter that blows past the expectations and also sets a new benchmark. Net profit recorded the highest year-on-year growth in the same 3-year period, increasing by nearly 30% to 81.4 crore rupees. After 2 quarters of contraction, the company's margins have resumed the expansion, reaching 16.3%. Now shifting focus to the financial sector. So let's examine the Q2 results from the Mahindra & Mahindra Financial Services. So the company's net profit has seen a substantial growth, rising 45% to land at 564 crore rupees, which is up from 389 crore rupees in the same quarter last year. So the strong profit after tax was supported by stable asset quality and also improving margins. So net interest income, or the NII, has grown 22% to 2,423 crore rupees. Total income also climbed 12.7%. reaching 5,049 crore rupees. M&M Finance has noted that margins were primarily driven by a lower cost of funds and also higher fee income. So despite the strong headline numbers, the company highlighted that credit cost remains elevated due to expected seasonal trends. So overall, the asset quality held steady throughout the quarter. Star Health's latest earnings report is facing scrutiny after the insurer missed key analyst estimates for the second quarter. So while the company has seen healthy premium growth, especially within its key agency business, the bottom line was hit hard by one persistent challenge, that is the provisions. So the company's required reserves for future claims remained stubbornly high, draining profitability and also keeping pressure on the balance sheet. Now, this comes amid an environment of intense competition across the health insurance sector. So, despite these headwinds, there is a silver lining. Star Health successfully held its market share stable against its peers. However, the heavy provisioning meant net profit for the quarter was sharply down. Now on to a story that's got serious fizz then. PepsiCo's top bottler, just unveiled a massive new brew. So they are not just quenching your thirst with soft drinks anymore. VBL is diving ahead first into the alcoholic beverage market. So their exclusive new deal to test the market, Carlsberg beer in key African territories, is the secret sauce everyone's talking about. Now it's a genius move to leverage their chilled out distribution strength and also get a slice of the high margin spirits pie. So that's not all, there's more. To ensure every bottle is perfectly cool, VBL is also getting into the cold chain game. So they have formed a new JV to manufacture their own whiz coolers. Radico Khaitan has delivered a strong second quarter performance with results driven by disciplined cost management and also significant gains in the operational efficiency. So the headline number is the net profit, which has seen a major jump at 73%, closing the quarter at 140 crore rupees. So this profitability milestone was complemented by a sharp double-digit surge in the overall revenue compared to the same period last year. Jewar International Airport may finally take off this December. Government sources tell NDTV Profit that a test flight at Noida International Airport is expected later this week or early next. So the schedule sees a slight delay due to pending work by the Airports Authority of India, which must install key systems before DGCA can actually issue an aerodrome license. So once granted, operations can begin. The airport, a joint venture between Zurich Airport and also YIAPL, has already missed 3 deadlines. Now it's an NDTV Profit exclusive. 2 key subsidiaries of Coal India are officially gearing up for their major D-Street debut. Bharat Coking Coal Limited, or the BCCL, and Central Mine Planning and Design Institute Limited, that is the CMPDIL. So sources are telling NDTV Profit that the market debut for both is likely by December, with the listing process being significantly expedited. Now, crucially, discussions on the critical floor price and also offer price are now in advanced stages. So the government is accelerating its efforts, with both DIPAM and the Ministry of Coal having approved plans to sell up to a 25% equity stake in each subsidiary. So the issue is expected to be a fully offer for sale, though the stake may be offloaded in 2 or 3 tranches rather than all at once. Next up, we have Air India Express, which is gearing up for a major fleet expansion to strengthen its position in India's fast-growing domestic market. The airline plans to induct 20 to 24 new aircrafts in 2026 as part of the broader 470 plane order placed by the Tata Group for Air India and also its subsidiaries. So the expansion will help the low-cost carrier connect more metro and tier 2 cities, improving the connectivity and flight frequency on key routes. So the airline says that the focus will be on domestic growth first before scaling up its international network. Now, a Hyderabad-based IT firm, Blue Cloud Softtech Solutions, has signed a 132 crore rupees MOU with US partner Bytech Lips to design and also develop the cutting-edge edge AI chips for industries such as oil and gas. So phase 1 of the project is expected to wrap up in about 18 months, after which both the companies plan to scale up the solution globally. So with this move, Blue Cloud Softtech is tapping into the rising demand for local AI hardware manufacturing, especially as India pushes to build its semiconductor ecosystem. Next up, we have Uber Technologies, which is also eyeing a bold leap into the driverless mobility. So from 2027 onwards, Uber aims to deploy a fleet of 1 lakh robo-taxis powered by NVIDIA Corporation's autonomous vehicle platform. So the two companies will build on their earlier partnership in which Uber shared driving data to help NVIDIA refine the AI and also the chips that car makers will use for fully autonomous vehicles. While the rollout starts in 2027, there's no detailed timeline yet for when the 1 lakh vehicle target will be reached. Telecom Regulatory Authority of India and the Department of Telecommunications have agreed to make the display of caller's registered name the default for all the incoming calls in India. So under this proposal, whenever someone calls you, your phone will automatically show the name with which their number is registered unless you choose to disable it. So the service will first roll out for subscribers on 4G and newer networks. Devices sold after about 6 months from the notification will support this feature. So the goal is to curb fraud, reduce unwanted calls, and also give you better transparency about who's calling. Next up, we have Honda Motors, which has identified India as one of its key markets for future growth. Now, along with the United States and also Japan, the automaker said that it sees strong potential in India's expanding automobile market and also the rising consumer demand. So while Honda hasn't announced any new factories yet, it's exploring ways to expand the local production and also capacity to keep up with the growth. The company has added that India will play a central role in its global business strategy, especially as it focuses on electrification and new mobility solutions. Renew Energy Global PLC has pulled off a notable sustainability win. So the company has scored 83 in the S&P Global Corporate Sustainability Assessment, putting it among the top 10% of the energy firms globally. So it's also the first India-based energy company to actually cross the 80-point mark in this benchmark. So for Renew, this underlines its focus on clean operations, strong governance, and also ESG performance as it grows its green energy footprint. Apple has hit a record $4 trillion market valuations, and this was driven by strong demand for its new iPhone lineup. So the surge in sales has boosted investor confidence, sending the tech giant's shares to all-time highs. Apple's latest models and growing services business are fueling the renewed momentum for the world's most valuable company. Speaking of valuations then, it's AI darling NVIDIA that managed to scale a record peak just to whisker away from $5 trillion in the market cap. Now, it will become the first company worth $5 trillion after the heavyweight chip maker said that it had $500 billion in bookings for its artificial intelligence processors and that it will build 7 new supercomputers for the US Department of Energy. So, NVIDIA stock has closed almost 5% higher, adding over $230 billion in the market value and also bringing its total value to $4.89 trillion after briefly touching $4.94 trillion. Cyclone Montha's impact continue to be felt across the eastern and central India. So in Andhra Pradesh, the death toll has risen to 2 even as the cyclonic storm weakens into a deep depression. So heavy rain and strong winds have lashed parts of West Bengal, Odisha, Telangana, Jharkhand and Madhya Pradesh, disrupting the power and also the road networks. Authorities have urged people to stay indoors as relief and restoration work continues across the affected districts. On to some more national news. President Draupadi Murmu takes to skies in a Rafale jet on a historic flight, becomes the first president to fly in the Indian Air Force's most advanced combat jet. So the sortie, part of Operation Sindoor, showcased India's frontline air power and the president's role as the Supreme Commander of the Armed Forces. The flight was piloted by Wing Commander Shivangi Singh, India's first women Rafale pilot, marking a proud moment for the Indian Air Force. Defence Minister Rajnath Singh will travel to Kuala Lumpur this week to attend the 12th ASEAN Defence Ministers meeting. Plus, so the meeting brings together defence ministers from ASEAN countries and also key dialogue partners, including India, the US, China, Japan, and Australia. So during his visit, Defence Minister Rajnath Singh is expected to take part in discussions on regional security, counter-terrorism, and also maritime cooperation in the Indo-Pacific. So he will also hold bilateral talks with several ASEAN counterparts to strengthen the defence partnerships and also expand the military collaboration. A new global report has found that people in India experienced nearly 20 heat wave days on average in 2024, of which about 6.6 days wouldn't have occurred without climate change. So the heat exposure has led to a loss of an estimated 247 billion potential labor hours in India. So the highest recorded tied largely to the agriculture and construction sectors. Experts warn that this trend is a clear sign of how rising temperatures are already affecting the workers' productivity and also the livelihoods in the country. On to some more national news. The Ministry of Road Transport and Highways has issued a Gazette notification on the National Road Safety Board detailing its structure and also the composition. So according to the notification, the board will have a chairman, one member secretary from north and also several representatives from across the transport sector. Now, this includes 6 members from state governments or union territories, 2 officers and 2 representatives from NHAI, and also 1 member from the National Highways and Infrastructure Development Corporation. So the move aims to strengthen India's institutional framework for road safety and also improve the coordination across agencies. On to some global news now. US President Donald Trump at the press conference in South Korea said a long pending trade deal with India